BBGI. Okay, here we go again. I'll wait until I get back with my coffee. I had a girl tell me that I looked nice this morning. She said, Jim, I like your haircut. So, did I ever tell you I had a crush on you, baby? What do you think I call you, Queen? Because you're the prettiest girl I've ever seen. It's like that perfectly clear. Amazing grace. I am now live. Jimmy might start jumping into pennies. I used to be a master at trading penny stocks. That was my specialty. I taught all these rookies how to trade them back in the day. From Zach Morris. No, I didn't teach Zach Morris strategy. He had one of his own. But I helped him a lot. And back in the day, we were all in just one room, and then it kind of 2007, 2008. So yeah, I got certain criterias I take when I jump into a penny stock. I started a watch list yesterday of what was running. Let's see if we have any cleavage today. No cleavage. Turtleneck. How dare you? Nvidia. You know I can't trade, honey, when you wear that turtleneck. How dare you? Yeah, I was a BBGI. We're kind of sitting up at support here on the SPY right at open. If it hits the bottom support, BBGI. Oh, I was going to go make coffee. One criteria is I always got to look at the news. Some of them, if there's no recent news, it's definitely a pump, and you got to be a little bit more careful with them. The second criteria is open up FinViz. For like BBGI, I want to check the size of the float. This one has 63 million, so that's not, you know, I'd like to see them right at 25 million. You have less volatility, and then if you have one that's like 2 million, you have all the pumpers on it. So you got to be a little bit more strategic with it. Anything under 2 million. But the higher the float, a lot of cases, the less volatility. I didn't clock in here. So it's news, and then the size of the float, and the volume. And my glasses are a little bit foggy. There's a couple others I need to look at. BMNR. So we have a little bounce going on here. And I like to look at the blocks, the size of entries, like I have on my scanner here. If I see big blocks, and it also depends on the price of the. And I like to keep it within a buck on up, $1 to $5 to $10. From 5 to 10, you have more institutional traders trading it. Anything under 5, you have less. SPX is down here at the bottom. We got support. So I might just jump right into SPX first thing. Today we got PAL speech. The market's been kind of at support level. Today's the 10th, and the damn options are high. So it's anywhere between 68.90 and 68.80. And I'm going to look at the 68.80s. The wind's real violent today outside. I don't know if you can hear it. So we're at support right now. And the 68.80s are at 510. So I'm going to take a trend line. Yippee-yi. We went right to support. Right it open. God. The volume's really extremely low today. So I'm set up for my 68.80. I think we're priced in already for the rate cut, which means we could go sideways. Netflix is pulling back to 96. Okay, we're at $5. We're going to see right here shortly. 68.80s. Okay, get ready. 470. We got a double bottom right now. So I'm going to grab one. Now, please just kind of think, today's going to be a little bit risky. This is the /ES that I'm looking at. And we're going to come over here, put up the 5-day, 5-minute. Yeah, we're definitely at a triple bottom. So let's see here. Jimmy likes the setup. $4.50. There it is right there. So enter at your own risk. Well, I'm going to type in triple bottom. Chart patterns, moving averages, and being in the now. We're at 520. $5.10. So they got a triple bottom here. 10.4. You're at 580. Now definitely take profit. Bingo. Off to the beach. Woo! Sounds cold outside. Baby, it's cold outside. Oh my God. Look at the /ES pop. Right to the 63. What's that mean? Hello? Knocking on wood. Yes, is James Howard there? Yeah, I was sitting back here next to my grandma, and we noticed that you kind of called this trade out at a triple bottom on the SPX. Well, we went ahead and took it, the exact same position you were in at $4.50. And I want to tell you that I made enough money to pay for Granny's rent today, and if I can do that again, I'm going to buy you a vacation. Any place in the world for you. I want them. If you can count to 3, you can trade with me. And if you can count to 4, you might make a little bit more. Jim, I was watching you take that trade, and I didn't get into it because I was scared. Pow pow scares me. But how would I take that trade now that I missed it the first time? Well, I would look at this support level right here, and I'd take it to the 1 minute time frame. And I'd set an alert just right above this here candle here. Now you got a head and shoulders set up right here. So it could pull back and stop there at the head and shoulders. Or you might get lucky and take a double bottom down here. So set your alert above the body of that candle right there. Create. Set it at that mark at below and type in double bottom. Then when the alert comes up, you'll know that that was a double bottom play. And we got the VWAP right here. So as we approach the VWAP, there it is, see? Now that's a resistance level. I'm bullish. A lot of people are nervous today. I've noticed in a couple of rooms that they're scared of pow pow. Part 3 of my trading strategy is being in the now. So under my assessment, you got to get, this is something that I want to try to start emphasizing that I haven't really been talking about much, and that's called being in the now. The market's been acting kind of funny and been always talking about today's the day, today's the pow pow day. See, now we're at 610. And I bought 2 contracts and I got 1. So we've been kind of pulling back some. There's 3 white soldiers on BBGI. Looks like it got halted. I don't know what's going on there. Something ain't right here. ORKT. AMD had a nice little pullback. Nvidia, 3 black crows with a tweezer bottom on Nvidia. We got a double bottom on Meta. Apple had 3 black crows with a tweezer bottom. Mr. and Coin had a good run yesterday and pulled back. Meta looks tempting. Meta's had a 3-day sell-off for $25. So my SPX is at 580. Yesterday's close was resistance. There goes BBGI. Halted again. I don't know why it's not coming up in the news. Stock's acting awful funny. I'm gonna go get water in my coffee and I'll be right back. Let it sit. I should have been letting it sit here. We're at 590. The 63 is now support on the SPY. $630, $640. Okay, we're coming up to the 200. What do you do? Please, you've been notified. I'm bona fide. You've been notified. What should I do, Jim? Sell the son of a bitch. Out at the 200 SMA, out at the 200 SMA, out at the 200 SMA. I'm not scared. BBGI is a microfloat pump? Correct. I'm Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about loose women, chart patterns, and being in the now. Whoops. I don't know what it is about this stock, but man, it breaks out and it gets halted or something. Kind of hard one to trade. And there's no news, so I'd short some of the gun if I got a chance. See if there's any, I don't know if there's any. Nvidia's pulling back down. AMD's got a double bottom snake breakout pullback, high or low. SPX knifing here. Watch SPX again. We're at a yin yang. $5 for the same one. I don't know how he does it, but his name's James Howard. Man, when? Stop. You're scaring me. Now, I do believe we were priced as I was going back to being in the now. I do think that there's too much attention on Powell today and that the market's been kind of pulling back some, not holding up at the end of the day. So I'm thinking that it's priced in, which means that we could have a small little bounce and consolidate. They're now at $5.50. See if we get a bounce here. I'll be ready to sell this sucker right off the bat if we can break the 63. You little rat. Nancy, could I trust you to make me a coffee and not put a Quaalude in it? Uh-oh. I'm going to stop out of this sucker, because I don't want to be caught in a rear naked choke. Oh. How'd that get up there like that? That was interesting. Oh, look at that. It's got my How did? It's got all my moving averages right there. $5.60, $5.70. This will pay for my dinner tonight. George. Come on, baby. So far, not too bad. Boom, baby. Well, that didn't go up much. 580, 570. There's 590. I'm getting where I can take profit now. Boom. I don't know how he does it, but he did it again. That's my second scalp. No, you keep pumping your pennies. The Nvidia's at a double bottom. We got a triple bottom on the Nvidia. See, there's people buying. There's big blocks going into this BBGI. Means you got a couple big fat cats trading it. IRBT is having its second day here. I want to see how accurate the float is. IRBT. $30 million. SPY has a double top, triple top, quad top. They're at $6. The SPX. I'm gonna go get my coffee made. ENVB is a small float, Randy.
copper ore in 2026. That's pretty much known now after we've seen a lot of the earnings announcements over the last month and a half from these copper miners. And so you are seeing some buyers really stepping in. Maybe also some optimism when it comes to China. They had some inflationary data yesterday. If you look at the CPI, it still came in lower than the street's expectations. But if you're looking at the year-over-year print, it's getting closer and closer to where a lot of economists really want to see China moving to the upside when it comes to inflation.
By teaching yourself market sentiment, listening to other traders, that's why I like to listen to these broadcasts, because I get the kind of feeling, how their sentiment is in the market. Some of them are misleading, some are pumpers, but in general, you can get a generalization of how you want to trade that morning just by listening to them. And that's kind of why I like listening to these channels. But if you can get a good grasp on it, like, sometimes I trade the opposite direction of sometimes, and that's not good. It's kind of misleading. But this morning I felt pretty good because of the way the market's been for the last couple of days. Monday was one of the hardest days I've traded till the end of the day, where I made it all back up. But that was like a big flush. And then listening, pow this, pow that. And he's always behind the curve. So I can't listen to his rhetoric that much. Right now I've had 2 successful trades, so I'm going to go into the kitchen and make me some. Here he is, his ugly mug right there. Jerome Powell, from 2 p.m. to 3 p.m. Is he going to be hawkish? Everybody assumes he's going to give a quarter-point rate cut, and that'll be the last of it.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor.
I love you.
Subscribe now at Schwab Network.
She looks hot there. Jeez.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
There's IRBT off the 200 right there I missed.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
Always clean.
Technical difficulties.
Hello.
Yeah, what's up, baby?
Schwab, a modern approach to wealth.
You coming over tonight?
No politics, no spin.
For a little smoochy
Just the market,
smooch?
from open to close and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com.
That's what I thought. Were you deaf?
We're back on Morning Trade Live. Chewy shares are higher after beating top and bottom line estimates for the latest quarter. Chewy saw revenue rising over 8% year over year, while the company's CEO noted it continues to expand its market share. 84% of Chewy's sales come from customers using its auto ship feature. So that's sitting up for almost 2.6% right now off the back of its earnings. Let's take a look at some of the winners and the losers on the session. No surprises there. GE Vernova is higher, really soaring in trade today. Up 12.5% right now off the back of what had been saying yesterday, high dividend and buybacks, of course, how it sees demand moving forward. Obviously, Warner Brothers Discovery has
right back
for us as we continue to track this heated bidding war between Netflix and Paramount. And Paramount is also higher, 3.5% after its hostile takeover bid. And then the laggards right now, Fortinet down about 3.7%. DoorDash is on the back foot to the tune of 3.7%. So is Uber. So a bit of a theme going on here, down 3%. And AutoZone continues to track low. Of course, this was an underperformer yesterday off the back of its earnings as well. It continues to extend those losses, it seems, down almost 3%, as I mentioned. All right, let's get to all things Fed. Joining us now is our good friend Ben Emmons, CIO, founder of FedWatch Advisors. Very good morning to you, Ben. Okay, so the market is setting itself up for what's going to be potentially a hawkish cut. Is that what we're going to get?
That's what it looks like, because the market's trading it this way. This morning we have yields a little higher and the gold down, and stocks are waffling, or it's sort of like mixed. So I think it's right, Sam. It's a hawkish cut, and that means that they're going to cut rates today, but they're going to likely signal that they're going to stay on hold for a period of time, something in that nature. And then it kind of depends how that message is delivered, because if it's delivered like in October, which sounded quite hawkish and unexpected, then you could see some volatility. But if Powell sticks to the script, I guess it's a meeting that's going to play out relatively okay, but it is a meeting where it's sort of saying, got kind of to the end of this easing cycle at this point to kind of sit back and wait what happens.
We certainly have to sit back and wait to see what happens because, I mean, the higher yields have been a bit of a head scratcher, haven't they? Because, I mean, the setup looks somewhat different to, previous FOMC meetings as far as, the bond sell-off that we've seen. I mean, you don't fight the Fed. I mean, that's the sort of mantra, isn't it? But let's see what happens. What are you looking out for as far as the dot plot is concerned? I mean, there's been conversations around how we could see 3 descents. I've heard this morning there could be 5. I suppose it's not just, who descends, but where their dot is.
I think that's the important part of this, and where exactly those dot plots land, because that's how they would express that descent more in a quantitative way. Because, we could guess on who will be dissenting. I guess Myron will be the one for 50 basis points, and then Schmidt will be for keeping rates on hold. But who will be siding with Schmidt is the most important part of it, because that will determine that dot plot shape, and it comes out at the same time, right? So we'll get the message from the Fed in both ways. My guess is that as we had the projection in September of 2 cuts for next year, that's where the question will be, will that be 1 cut? And that's what the 10-year yield seems to be implying currently, that it moved up about 25 basis points from the recent low, maybe indicating that it will be 1 cut year instead of 2 cut year. And anything that happens further out is a little bit too ambiguous, but people can see the path to the Fed will be also coming to an end on this easing cycle, as the ECB already is at its end. And it seems like in Australia they may be moving back towards a hike again. But that's sort of the scenario that's going to play out, and this Fed maybe be in a dot plot where it says, look, inflation is going to stay above the target and unemployment rate is kind of where it is. You can't really project more cuts out than maybe 1 for 2026.
Yeah, I mean, it's certainly an interesting story when you look across, what's happening globally with these other central banks. I mean, the ECB looks like it's pretty much done here. I mean, you've got talk, as you just mentioned, of Australia, pricing in a potential more hawkish RBA there. Obviously, the BOJ expected to hike next week. You made an interesting point in one of your notes yesterday, and I quoted you in the show that you're seeing an overall improvement in labour conditions. I mean, obviously we got the jolts out yesterday. It doesn't look like, anything sort of disastrous. I mean, if anything, it looks like, things are pretty, stable as far as the deterioration we've seen in the labour market. But you say this makes the case for risk management cuts less compelling. And that's a good sign because it suggests past rate cuts are helping stabilise employment. Do you think we're starting to see that transmission already?
I think so, Sam, and I'm glad you bring it up because I think that's exactly what's playing out. Like these jobless claims staying so low in the wake of a major government shutdown, which would have affected jobless claims at least seasonally. So that's interesting to note. And then you mentioned the job opening seems to be stable, if not robust. And most of all, the unemployment rate, although it has come up, there's also people coming back into the labor force. That was what the last payroll report showed. That's a positive sign that people come back in the labor force because they think they can find work quicker again. And then lastly, it's some of the indicators that the Chicago Fed and San Francisco Fed put out. There seems to be less stress in this labor market overall. So having improving conditions, I think really because the risk management once again worked like they did last year. They cut rates to try to get ahead of the problem in the labor market, and it seems to be working. So I think this is why will be the last cut if they do it today. They don't need any more risk management. We can kind of keep unemployment rate here where it is because they did enough to help the economy.
We're at 6:30.
And how much, should we be paying attention to?
We just broke major resistance level.
Thinking about, sort of replacing Powell, because there's been a lot of sort of market reaction, particularly when you look at the bond market, to Kevin Hassett potentially being the front runner here with that steepening of the yield curve. A couple of other names being thrown around here, but how significant is this? What are you watching into 2026?
I think it's very significant because this Fed chair is obviously someone who has the eyes of the president so strongly. I mean, he basically said the other day that it's a litmus test, right? The first meeting, June of next year, will be the meeting where this Fed chair is expected to lower rates. Now that may be your one cut that will happen next year. Who knows, right? It's a little far out, but I do think it's significant. It sets the tone in the Fed, but at the end of the day, everybody agrees it's a committee, it's a consensus in a sort of body. That will not change too much. And the Supreme Court now, with this FTC firing, what seems to be happening, did say that they have a carve out for the Fed, meaning that there will not be, the Supreme Court will not allow the Fed to be anyone there to be fired. So I think that risk is off the table, meaning that if the new Fed chair comes in, you cannot just sway everybody into this rate cut with the threat of being fired if you don't, right? So I think the market is right to sense that this is not going to lead to an accelerated rate cut.
This guy would be horrible to work with.
Nonetheless, it's someone who puts a different stamp on the Fed than before. I mean, historically, there's no doubt road. Powell has been the chair who has pivoted the most in his communications from any Fed chair in the last 20, 30 years. And he had significant volatility at times because the way he communicated. So I think that's important too. This new chair, how she or he communicates with his relationship with the president, matters a lot, I think, to markets. Because like today, if Powell comes out and hawkish again, it's going to cause volatility, right? So it's about how the message too. I think that matters too. So I think that's what we look forward to with the Fed chair in the future.
Okay, communication is key. Ben Emmons, always appreciate your insights. Thank you so much for joining us on such a key day. We'll talk to you a bit later on. Ben Emmons, their CIO, founder, FedWatch Advisors. Coming up, we'll get a closer look at the big picture from the team over at Charles Schwab Morning Trade Line. We'll be right back.
IBRT moving up. That's your next penny stock.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis.
We got a quad bottom.
Watch now
on the video.
SchwabNetwork.com.
Apple's at the 63.
How's it going? First day, so sometimes Next.
AMD's sitting up, double bottom.
Could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab, powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle
BBGI at 1334, baby.
Complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Was that a poorly one?
Final 90 minutes of the trading day.
I thought it was a good one.
Markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
Now notice that I have a little bit of cinnamon in that coffee. YouTubers, this is my Christmas coffee. Creamer, lactose butter, whatever you want to call it. You wouldn't believe how much this butter costs. And a tablespoon of that butter in it. Green Valley lactose free cultured butter, lightly salted. You got a tablespoon of that in it. Tablespoon of this other stuff I put in it. Let me go get the bottle of it. A tablespoon of MCT oil. For weight management. Pure, unflavored, keto friendly, thermogenic. Concentrate from coconut oil. Navidier.
Now, we've been in the camp that's looked for a steeper curve for a long time. I think 10-year yields are sort of range bound here. We're testing the upper end, 4.25 or so on 10-year treasuries. The yield curve at the short end is pricing in a couple more cuts, which I think is probably reasonable given some of the softness in the labor market. So, market reaction is going to be interesting in the short run. We've already poised for a steeper yield curve, but in the long run, I think that that's the direction of travel. So you might see a little bit of a correction once the Fed comes out, especially if Powell is a little bit hawkish. But I think the longer term trends are in place.
And what are you talking to clients about right now as to where some of the...
Okay, here we got the pullback. 3 black crows with a spinning top.
A conversation with Allspring yesterday.
I'm sorry, honey. You're not saying Navidier, so you can't talk. You got to say Navidier. They're now at $5.10. Jim's watching these closely. We're out the VWAP. Oh, I missed that. Damn it. I'd have took that trade. /ES on the VWAP. I'd have took that at 510. We've got 3 black crows with a hammer, sledgehammer. Inside Harmony. What's it? ENVB. Okay, BBGI is pulling back now. ASPC. BBGI. ASPC. We're back to 510. And the SPX. Okay, we're watching close here. Jimmy, should I take the risk? We got 2 sets of 3 black crows. Or should I go get something to eat? Today I'll be having a burger and an apple. SPX. $5. Could get a double bottom. These are the 68.80s. $5. I'll grab one. And I don't know, it might be a little risky. Oh, puts. Rob. Might have to get out of this trade. $5.460. Oh, you got to hold. Slash ES is that inverse head and shoulders. Oh, damn. Come on. I'm down $80. Come on, Jimmy. Pull a rabbit out of your hat. Come on. Down 40. Break it. AMD new low with Nvidia. BBGI triggered my alert. Randy, it held above 10. That's another thing you look at. If it stays above 10, I'm down 80 cents on these. $80, I mean. Investor sentiment muted as what? I'm down 60, 40. BBGI halted again. These are hard to trade when they halt like this. A lot of people don't know how to trade them and they stay away from them. Usually I don't like trading them either. When they halt so much, they're hard to get in and out for one. Down $20. I'm even. Let's go. How's he do it? Hammer, spinning top, hammer, hammer. I'm not ready to go in there and make my lunch. I don't know, that coffee kind of gives me a little bit of weird feeling when I make it with that MCT oil. You got that wind outside, kind of giving a little ghosty era while I'm trading here. You hear it? God. I feel it coming through the window. Well, that's pretty loud right there. If you ever been in a tornado, you know what I'm talking about. IBIO, is that on the list too? Yeah, IBIO's, let's see if there's any news on it. IBO to participate in 8th Annual Evercore Healthcare Conference. So that was last month. ASPC's pulling back. I'm back to even on this sucker. I wish it'd do something. We're squeezing between the 9 and the 21. Should do something here soon. There we go, $5. 5.10. There we go. Not moving much. Oh, good. 520. So I'm up 80. If we get to the 200, I might get $100 out of it. I'm up 100 right now. So I should make a business decision. 530. $540. Okay, now. Can you give me 550? Please? Do you know who I am? For I'm Washboardjim, the sneaky snake trading strategist. Last one, 550, baby. How does he do it? 550. I'm not sure how he does it, but he did it. I used to be the scanner king. I am. I can get it back if you want me to, but the room has to pay for it. I can put these guys to shame, especially that one that you gave me, Randy. He got too much on there. Under the 20, moving up fast. By the dip. Gappers. Momo, high of day. Momo. 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 Oh, what's that one is? High something. High resume. New daily highs. Lows. Momo large cap. Yeah, I see. I'd say, sir, do you mind if I come in there and teach you how to set up your scanner? Basically, let's just set up a low floater and 5% move. Most important gappers, what the hell is he talking about? Earnings. Okay, we pulled back to the 21 again. Washboardjim, my grandma wants to meet you. Hello, Geo. Is that the Geo that I used to know? Geo Finance. Are we old friends? So we got to pull back to the 21 here off 3 black crows. For I'm Washboardjim. Uh-oh, here we go. Pay attention. $4.20. How's he do it? Everybody's wanting to know, how's he do it? This is trade number 4. Trade number 4. You'll be loading up at gate 1. Trade number 4. Washboardjim, we're going to give you priority seating today. Well, I'm a YouTube follower, and we're going to have you live on the airplane today. It's the only channel we're going to show. You're now at 460. This is the SPX scalping. This is my 4th scalp on the SPX today. Is it true that you have the biggest balls of them all? Yes, I do. For I'm Washboardjim. We're now at $5. Washboardjim, we have priority seating for you set up here. American Airlines, and we have a stewardess that wants to walk you in the plane by herself. We need to strip search you first, sir. It's located in the back bathroom. We need to hold this position immediately. It went to 590. I could have got out there, but I didn't. We're now at 460. Do you see these here candles right here? So what I want you to do, that's higher low, higher low, higher low, higher low, higher low, higher low, and higher low. We got to keep that higher low going or we get out of the trade. Actually, I'm going to put it right there because that could be an inverse head and shoulders. And your stop would be set right here. This is a head and shoulders right here. So that's the resistance to break. So, being in the now. Monday was a rough, okay, here we go. We got to hold this. And we didn't hold it. Ugh. Now these things are at 440. I got in at 420. I'm staying in. That or I sell them and make 60 bucks. That'll be scalp number 5. Yeah, man, I tell you what, that wind outside, that sounded like a siren right there. I don't think that was the wind. Come on, no. Don't do it. Could be some house fires today with that wind like it is. We're at a double bottom. That's tornado alarm. No, damn it. Okay, this is it. I'll stop out of this trade if it doesn't hold. We're back to 420 here. I'm scared. I'm scared. Come on, baby. We're at 440. I'm not scared yet with a trade, but I'm scared because of outside. We really need to hold this support level. There's only one thing to do. Well, it didn't hold the double bottom. It broke free. It broke free. I'm at my last support. the hammer. Don't throw me in the slammer. All we gotta do is break the 9 EMA. I got in at Randy's favorite number, 420. 420. Let's break out now. I don't give a shit about how. Today is Fomac. He's going to give a speech. I'm going to stick my middle finger right at his breech. We're creating a Head and Shoulders. That is in verse, you can tell. I'll tell Chairman Powell to go straight to hell. Let's break the 9. Like Johnny, I'll tell Powell to walk the line. I'm up $100 a contract, together. That's $50 a contract. Should I sell at this Head and Shoulders? I don't know, I'm getting a little bit older. If I wait here all day, it might not break away. I'm at a resistance line. I talk about it all the time. It's the Head and Shoulders resistance. We're at the 63 also. So this is a resist. I got 2 reasons to get out of this trade. I've got the 63 and I got a Head and Shoulders. Now this is the second time it's come up and hit the shoulder line. So what do? Can anybody tell me? You scale out or you get out? Do you understand? Yes, I do, Jimmy. Out at $4.70. That's trade number 5. I don't know how he does it. How does he do it? He plays music. Because he's the founder of the Sneaky Snake trading strategy, where he talks about chart patterns, moving averages, and not being a homosexual. the trade at 420. See, I sold it at the 63 in May. I got in the trade at 420. Sold it at the 63 in May. I can sit here and play my guitar. It's better than playing at the bar. Honey, won't you buy me a drink? I might give you a spank. You look like the girl I used to date back in high school. Was it you that taught me the golden rule? I was a virgin when we met. I can't count the girls on my hand. Hey lady, wait for me after the show. I've got a couple things I want to go over. Whoa, 510. I'm done. 470 and 510. How in the hell does he do it? We're at the 200 SMA. Anybody get in that trade? You're okay. $5.40. Would anybody like to give me a grade? Yeah, I went and took my urine test. I passed it. I was on mute. Well, that's not nice of you and me. I bet you hang out at the YCMA. You should know better than to mute me. What kind of human are you? we're at 560. Well, I called these at 420. Now we're at 560. Okay, I'm going to take a break from playing the guitar because I'm tired of being a rock star. I was just tickled to catch that bottom on that trade. I want you to recognize the pattern here. Oh God, look at 610. Oh my God. That'd have been $400. $420. Oh my gosh. It's going to the next resistance. Double top. Fuck. 680. I got out too early on a Fred Powell speech. There's a few chickens in the that kind of puts a damper on the fire. I say I'm impressed though. I did catch the bottom, but damn. Getting out at the 63 and the 200 where I could have got out up here at a double top on the /ES. I mean, there it is, clear as day. And it hit my resistance line, wherever that come from. Let's find out. Oh, yeah, I see it now. That's a pivot point. You got resistance, support, 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 resistance, resistance. That's a pivot point. If I look at the 5 minute, 5 day, that's the 200 EMA on the 5 day, 5 minute. So that would have been a great exit idea right there for sure. They're at $7. Jesus. Jesse, good job. Who's the best trader out there, Jesse? Jimmy is. Cameron, the Warrior Trader, says he has a 63% accuracy. He's a momentum trader. He trades penny stocks. He's what you call, and I'm not cutting him down, but he had, seems like all of us, we all have difficulties when we first start to come out trading. One is you don't have a game plan or a strategy. Now the market is set up to have all kinds of strategies. There's all kinds of ways you can trade it. Depends on your situation, your circumstance, if you work, if you don't work. But there's always going to be a way you can find out a way to trade it. If you're a full-time employee, you'd be a swing trader maybe, or you'd trade pre-market or after hours. You'd have a different strategy. If most losers, most people that don't get it don't have a strategy. I can trade different ways, but I find trading the way I'm doing right now one of the best. And my accuracy rating is a lot higher than 63%. Chart patterns is one of them. With chart patterns, you study candlesticks. Moving averages is step number 2. And step number 3 is being in the now. Knowing the market sentiment. That's where you apply news. Number 4, patience. That's the first that you got to learn, is how to be patient. I always tell beginners to start out paper trading until you develop a strategy. Don't follow anybody but yourself. I've learned from many traders, Clay Trader. Today I sat back and I listened to the Trader Warrior. But there's not too many that I have followed. I've never followed anybody's trade. I take their ideas, like CNBC, when they talk about stocks, it's usually breaking out of an all-time high, and I can't trade like that. I'll take that same ticker and wait for the support or the knife or the chart pattern, which I have. You know, they sit and they badmouth Tesla 8 hours a day, but it's one of my best money-making trades that I've had to play. The video, they were pumping at an all-time high when it was at $1,200. It's going to $1,400, they said. It was way overvalued. And then it had a split. And all they could do was badmouth it. Netflix, I was saying it's at an all-time high. They pumped it up to $1,400 to $1,500. It had a split. Now look at it. It can barely break 100. Oracle at an all-time high. They pumped it up to go to 250. Now look at it. But I waited for the pullback. Boeing, they pumped to 250. It went to 180. So I never follow anybody's trade, but I'll take the idea and use it. So take what little bit you know from traders and follow the ones you trust. None of us are never 100%. But I sit here 8 hours a day just talking about mine. Chart patterns, moving averages, and being in the now. So I'm gonna go make some lunch. This was the chart that I had charted this morning. We held that support level. This is on the 1 minute. So we had one candle go below it, none, and then we had two go three maybe. I'd almost count that one as a third. But I want you to start studying these breakouts, like a hammer with a tweezer bottom. We had a doji with a spinning top and a hammer. We had an inverted hammer. A tweezer bottom with a hammer after three black crows, a tweezer bottom. Three white soldiers, another hammer, and then broke out the 9. Tweezer bottom with a hammer. Tweezer bottom with a hammer. Tweezer bottom with a hammer off the 200. IBO hit my resistance level of 308. IBIO. Okay, I'm gonna put this guitar up, make my lunch, and I'll be right back. Trade number 5. Marley's got cleavage.
Most folks are familiar with things like endpoint or device protection. I need to protect my laptop or my iPad. They're familiar with network protection. I need to keep the bad guys from getting onto my network. They're familiar with the cloud protection now, like how do you protect the data that's living up in the cloud. Identity is a relatively newer area of focus and security, partly because it's become such a clear target of the bad guys, partly because in today's world, those other vectors, while important, often aren't even the part of the equation you need to protect. You're often on your own device, not the company's device, logging into something in the cloud that your company doesn't technically own, right? So you have to say, who or what is this identity trying to access my data? It's that focus on identity that's still emerging and relatively new, but the uptake has been strong. We're in about half of the Fortune 500 now, about a quarter of the Global 2000. Big companies around the world are recognizing this problem and trying to position themselves for better protection.
And Mark, we've seen a bit of a strange pattern across some of the cybersecurity stocks. CrowdStrike, Zscaler, of course, now SailPoint. Strong results, beats, and then we're seeing some stock declines in the wake of this. I know for you it's your second straight quarter where you had an earnings beat and then saw this interesting performance in terms of stock. Do you think this is an industry-wide sentiment issue, something specific to the identity security space? What are investors missing here, specifically when it relates to SailPoint?
It's a great question, Marley, and I can honestly tell you we talk about that some ourselves, as you might imagine. But at some level, there's a couple things going on for sure. One is, well, we were public for almost 5 years, from 2017 to about 2022. We went private with Thoma Bravo and then re-emerged as a public company in February of this year. But as a result, we're considered a, quote, new issue, a newly public company. And I think part of what you see in a, quote, risk-off environment, and some core investors are taking kind of a risk-off approach, is new issues are often one of the things that gets pulled back on because it's considered riskier. This is a newer, less proven story. So we know there's some of that happening in the marketplace.
See, the sentiment out there right now is that these fat cats think we're overbought. They've been saying this for months, almost a year now. And if you'd listen to the rhetoric, you wouldn't be in this market.
To say we believe we can continue to do this, and so sometimes it really is almost puzzling. What else do you want from us, so to speak, in the market? We're doing everything we can to show you that this is a healthy, growing business, and we feel great about it. And I think some of that recovery you saw yesterday afternoon, and we're seeing even a little more this morning, is people really hearing the story in more nuance than just the say.
Last year at this time, they were saying the market's up 40% in the past 2 years. We've got to have a pullback. Then it lasted, and then they kept it up. And then it finally pulled back for 6 weeks, and we bounced off the 200. And they haven't stopped. They have not stopped. Don't listen to their crap. So if you go back and look at the daily, we're going to clean this up. I still want to go in there and make my lunch. See, we're at the 9. We held the 9, we held the 9, we held the 9 3 days in a row. You got a gap right here. You got a gap right in here. So I'd almost take this little bitty gap, and we came back and we filled that gap there, and it bounced on up. And then we held the gap. See this candle right here? Put a price line all the way across it. So that would be my lowest support. We held it, we held it, we held it. We held the 9. Then on the weekly, we held it, we held it, and we held it. This week we've held that support level on the weekly. So if it did not hold that 68, 12, 24, we got the 9 right there next on the weekly. And that'd still be bullish. Now we have a tweezer top, and we hit this triple top right here. So I'd go to the body of that candle and put my next resistance level somewhere around 688,447 to the penny. And that's going to be your resistance to break, to bring it up to an all-time high, or at least to that number right there. So we go back to the daily. And that takes you to that body right there. So that would be your hard resistance to break. That'd be a right shoulder. Now I bring it to the hour on the 20-day, and we're at the 63. And we bounced off the 63, so that's support. And you'd have to break the 50 SMA for it to move up higher. Still, the 50 SMA held support, held resistance on the hour. Support, you got the body, and the body here is resistance. So this body would have to come up and break that or stop there at the 50 SMA or the 21 EMA, either one. So you got a yin-yang, the body right here and the resistance right here. You draw a price line all the way across. And that'd be just right under the 21. So that would be maybe today's resistance or after the Powell speech. You have a triple bottom, body, 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 on the 1 hour time frame, so off the 63. So that would be your support area to hold, to stay bullish for the rest of the week. Then you take it to the 15-minute. We held the 200 here, and we got a solid support right here for the rest of the day on the 15-minute at 68.33.25. So if Powell spoke, and when we held that, and this is on the 15-minute, we got support, body, body. Almost two wicks touched it. Wick touched it. Body, body, body. Wick, wick. Body, 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 body. So I'm looking for the most consistent trend line on that chart. And that's on the 15 minutes. So that's pretty solid. If Powell came out and gave a speech and we pulled back to that area, I'd probably go calls. Or buy it into close. Then you go to the 5-minute. You got a 1, 2, 3, so if it failed that support, it'd probably come down in here. Then you got the 1 minute. And in the 5-minute, you hit the 200. Wick, body, 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 body. Wick, body, 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 body. Wick, wick. Okay, well. Time for lunch. George.
350% increase, just roughly speaking, year over year. So essentially the stock gap to the upside significantly, and this is all part and parcel of what's happening with Oracle, moving more so into the agentic AI space outside of its core business from an enterprise resource management software space. Now, what's happened since then is the stock has backfilled all of that move, all the way back to the second quarter of last year. Now, if you look at the estimated revenue
We're at the orb.
for the quarter they're going to report, you can actually see it's modest in the context that it seems to be based on core business, not the RPO business that they have going for them, expected until 2030, which is quite large. So EPS is $1.64. That's about 11% higher compared to last year. And then if you look at sales, around $16.19 billion. That's higher by about 14% year over year. So what's happened here, I think, to be honest with you, Marley, is that one of the things that Oracle did not disclose in terms of that huge RPO backlog is which customers are essentially paying for that, or contingent payments for that number. Some estimates have that OpenAI alone was about $300 billion of that, and I think that the struggles for Oracle since last quarter, which was a pretty remarkable move, was that OpenAI may not have the capacity, at least right now, to pay it. And that's why we've seen the entire move from the September quarter report just evaporate.
Yeah, and we've seen them fall, as you mentioned, just in the last month, down more than 8% for Oracle. So very interesting setup coming into earnings. And I know when you're structuring an example trade, particularly on an earnings day, it can complicate things, predicting that movement and what they're going to say. So as you approach this example trade for Oracle with their earnings after the close, George, how would you structure it?
Yeah, so if you look at last quarter, and I remember covering this, the expected market maker move was essentially like $20. Effectively, they ended up with a $100 move. So that was a 5 sigma move. That is a very outsized move. This quarter around, based on the retracement of the stock, and again, the uncertainty around the RPOs, I don't expect that kind of move. Now, if you look at the market maker move for this quarter's report, it's around $22 or so, about 10%, just roughly speaking, once again. So what I'm going to do is I think there's a biased tilt to the upside, so I'm going to skew a neutral iron condor here, about 1.5 times the upside market maker move, which places it around the 255. Coincidentally, that's around the 50-period moving average since the stock price is below that. And then on the downside, I'm going to structure it at 1 times market maker move around $20. So essentially the structure is this: going out to December next week, 9 days to expiration, I'm going to sell 255, 265 call spread above the current price and below the current price. I'm going to sell the 200, 190 put spread. And altogether, you could generate about $3 in credit or $300 in contract. So the whole premise behind the trade is range bound. There's more flexibility or skew to the upside, just in case there's a surprise. And then, of course, the max profit is achieved between the short strikes at 255 high, 200 low. Break even 258 high and 197 low, and then we're earning $3, but the risk is $7 on this trade. So for what it's worth, again, it's more of a neutral trade with a bullish tilt or skew to it.
All right, George, we appreciate you being with us for the latest on Oracle expectations ahead of their earnings report, and also for that example trade right now. Oracle trading down about 1/3% at 220.85 in advance of those earnings, and that's George Tillis. Thanks again. Coming up next, we've got our 360 round. We're going to take a look ahead at the Fed's rate decision, which is expected later today. Expectations calling for another 25 basis point cut. We'll dive into that next on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to discuss expectations for the Fed announcement today. Joining us now, Bill Lee, the chief economist at the Milken Institute and Global Economic Advisors, and Ben Ayers, senior economist at Nationwide. Thank you so much, both of you, for being with us on Fed Day. You know, Bill, I saw your notes in advance of our talk. You said that you're warning the Fed is behind the curve and risking a policy mistake if it doesn't cut today. So what are your expectations for today, both in the cut, how big it will be, but also even potentially more importantly, what Jerome Powell will say in the press conference afterwards?
It's really going to be a challenge for Chair Powell right now because a
it is not.
FOMC is really trying to fight the last battle of inflation. Even though the events that have happened, the stagflation, the fears of tariff-driven inflation are starting to wane pretty quickly. I mean, after all, when was the last time you heard tariffs in the news, right? And when GDP growth is hitting almost 4% or better for current estimates, there's really no hint of that stagflation showing up. But the Fed is so concerned about the service sector inflation that is popping up and is staying fairly high that a lot of the FOMC committee is going to dissent, saying, well, we really think rates should remain high, even though the labor market has become softer and softer as we go on. So Chair Powell is going to face that challenge of threading the needle. He's going to have to say, we are unified, believe it or not. We are going to make the right decision, and we're going to cut today because the markets expect us to cut. But we may pause in January and early next year until we get more visibility. I think that's the key word you're going to have to listen for, which is that they're going to say, we don't have enough data to make a decision for the.
They've been saying that forever.
And I think as long as the hawkish members of the FOMC are voicing themselves so vocally, and because Chair Powell is lame duck.
No, shut up. I called it off the orb. Boom. It's a spy. Zach, this stock's behaving very well today.
And we won't see as much of a movement on things in early 2026, but there still are the two sides of the coin here. And I think the push for lower rates coming from potentially a shadow Fed chair early in 2026 might push us to some cuts later in the year.
And Bill, you were mentioning service inflation there in your last answer, and service inflation is showing signs that it's becoming immune to additional monetary tightening. So if that is in fact the case, does that imply that rate hikes or even pauses are even effective policy tools anymore?
Well, ask yourself the question, is your doctor going to be lowering his prices because rates are high? The answer is no. And I think the service sector has always been the stubborn one. And the one nice thing about the Fed is that it targets the entire CPI. And as goods prices start to disinflate, that is, the rate of inflation there is starting to come down, way down because of energy prices, we're going to see a moderation in the overall CPI. And that's really what the Fed cares about. But the stubbornness is really in the interest-resistant sectors of the service sector. And while the hawkish members of the FOMC can cry as much as they want, their high rates are not going to hold back the ability of dentists and doctors and other service sector workers to keep their prices high.
And Ben, you brought up a really good point. You know, we've been in a data blackout because of the government shutdown. They're missing a lot of these key factors that they usually use to make these decisions. So with that, you've said there could be some holds in place. We're also going to get a new...
They couldn't make the decisions when they had the rate, when they had the numbers. Would you just get over it? Talk about stocks.
The dovish arm of the FOMC here in recent months, and is going to be put out there as the main reason why we're likely to see a cut today. You know, I think inflation is going to be in the conversation.
BBGI.
Certainly we're going to see potentially some more impact from tariffs on the inflation story in early 2026. But I still come back to the labor market, and I think if we see the labor market continue to be soft and not see much hiring, particularly from the service sector, early in 2026, I think there will be renewed calls to potentially lower rates. And I think the focus on the softness and the weakness for the hiring front and what that could mean for consumers is probably still the main linchpin for if we see more cuts next year.
Well, I appreciate you both being with us on this important rate cut decision day to walk through some of the expectations. Bill Lee, chief economist at Milken Institute and Global Economic Advisors, and Ben Ayers, the senior economist for Nationwide. We will, of course, have an extended edition of the watch list today to cover that decision at 2 p.m. Eastern, and we'll continue talking about it on Market on Close after that. Want to thank you all for joining us today on Trading 360, though. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store and tune in 24/7 on schwabnetwork.com. Fast Market with Diane King Hall is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
BBGI.
That would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
I nailed the resistance this morning. On the spy.
Welcome to fast market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange, and Wall Street is largely in a holding pattern ahead of the Fed's decision on interest rates. Let me give you a check of your scorecard as we hit the lunch hour. We've got a slim gain on the S&P 500. It is just above the flat line, better by just shy of 0.1%. At top of the leaderboard, you got consumer discretionary, followed by industrials and financials. The Dow right now has a gain of just shy of 0.5%. NASDAQ 100 off by 0.2%. Russell 2000 higher by 0.4%. We could certainly start to see more shifts in the price action after 2 p.m. Eastern today. Here's the roadmap for today's show. We'll look at example option strategies for Oracle ahead of its earnings. Those are due after the bell today. Plus, the team from Lightfolio will be along with fresh sentiment data on Adobe. It's had a difficult year. And Synopsys has also got earnings due after the close. Now that we've got the roadmap for today's trading action, it is time to bring in my co-hosts and trading veterans. You've got Tom White in our Chicago studio and Kevin Higgs joining us live from the CBOE. As you know, we've got you covered from exchange to exchange and beyond. All right, guys, all eyes on the Fed today as investors anticipate another rate cut. But the road beyond that, a little more foggy, to borrow a phrase from the Fed chair himself. Tom, what's your take as we head into the decision?
Yeah, happy Fed Day, Diane and Kev. You know, I think, the market's uncertain right now, and that's why you've seen this chop so far this week. Is the Fed going to cut, which is widely expected, about a 90% chance that we're going to get that cut. But are they going to be hawkish or are they going to be dovish with their commentary? If you look at the data, the jobs data kind of is reflective that maybe they should be a little bit more dovish and maybe they should continue with their rate cut cycle. But on the other hand, if you look at inflation, still above their targets, and that's a concern, I think, for the Fed. We're going to have to listen to the commentary from Fed Chair Powell and how he handles it. There's going to be dissenters, whether it's 1, 2, or 3 dissenters on a rate cut. We'll have to wait and see on that. But what type of rhetoric and consternation there's going to be taking place within the meeting. Fed Chair Powell kind of pounded the table last meeting at the end of October that, hey, there were some tough decisions made and some tough rhetoric going back and forth between the Fed members. So that's what I think what everybody's eyes are on. The market's not comfortable right now. The price action, not good. And everybody's anticipating
That's your opinion.
Rally. And then on top of that,
you're wrong, bald-headed.
Causing a little bit of headwind here for equities as 3 major indices are in the red so far this week, just ever so slightly, while the Russell hitting fresh intraday high just yesterday. So, yeah, lots to digest here, and we're going to have to wait and see and listen to the commentary.
Indeed, and then the question is, how much agreement or lack thereof could we potentially see? Kevin, what's your take?
We're priced in.
This is one of the days for traders that it's a bit frustrating because you're
Monday was.
and then you're gonna go from being slow to being real busy from 2 o'clock Eastern to the end of the day and potentially beyond. I think what Jerome Powell says is more important than what he does. I think the dissenters are going to be interesting.
I think you need to shut up.
Projections is going to be incredibly important. And so I think this market, interesting though, price action. Tom mentioned the price action. Look at yields. Yields touched 4.2% and now are down almost 0.5%. So maybe that's a little look into the future.
When trading the SPY into the Fed meeting, I'll be looking at
they've been creeping higher. So his
tomorrow.
Been creeping higher. So I think this is going to get real interesting, Diane, around 2 p.m. Eastern, and then because normally it would be 2:30, but we're going to get an SEP.
Look at a straddle.
It's going to be real interesting as well. So yeah, I think the busy part of the day is coming up, Diane, and it's about 2 hours away.
Yeah, indeed. But you know what else is interesting? GE, Vernova, those shares powering up. And every time I look at
this would be the SPY.
Rising higher after boosting its guidance.
So when he comes out to speaking, I'll see which direction these go. And let's say if we were going down, I'd be setting myself up, or I'd scalp this real fast on the down. I'd take this one off
maybe AI
and just
gets
trade
the
this
right,
one.
Front.
And then if it started to reverse, I'd just simply push that, take this one off, and trade to the upside.
Needs that these companies are going to have. You mentioned
This one looks like the best one to go. It's
they raised their 2028 revenue outlook
on both sides. If I wanted to go a little cheaper, I could go into that one, but this is definitely.
And they forecast for 2026 revenues 41 to 42 billion. Free cash flow coming in at 4.5 to 5 billion. That was above expectations also. So everything going right. Free cash flow, up basically $1 billion from their earlier estimates. Yeah, this is a home run for this company, and kind of is reflective. If you look at the backlog, they expect that to continue to ramp up to about $200 billion over the next couple of years. So, yeah, backlog matters, and demand outweighs.
If we hit rock bottom,
for GE Verona.
I'd almost move this down here.
That's a benefit for these stocks, and I think that's maybe what.
But if we hit rock bottom, this thing would be a lot cheaper. So I'd probably go.
Initially, it was chip makers, right? It was Nvidia.
685s.
Others that were implementing AI. Now you have to start taking a look at all these companies that are going to power the AI build out, and GE Verona definitely a winner here.
Okay, I like that. I'm picking up.
That's a straddle.
Tom, with the powering the AI trade. Kevin, what's your take when you look across this power player here?
When you think of the last 10 years,
This is a strangle.
GE, and this was a company that they
I
thought
could do
might
that
be
one too.
insolvent because their dets were so big and the company was in such disarray.
If we went up, I'd
When
be
they
looking
split
at this
the
one.
company up into GE Aerospace, GE
And if we
Healthcare,
went down,
and
I'd
GE
look at
Vernova.
this one.
GE Vernova was thought to be the weakest of the
Or that
three
one.
weeks. Larry Culp
Either
split
one
up
of
these
them.
companies. He got them all healthy and then split them up. And everyone thought the other two would be the stronger. And look what's happened to GE Vernova. I mean, I've got a chart up. It's unbelievable. Last April of this year, it was 150.
That's an iron condor.
It's unbelievable. Or April of 24, it was $115. Now it's 700. It's nothing short of spectacular, and it's a tribute to the management of GE, Larry Culp, and the management team that got these three companies figured out and got them stable, and then split the company up and let these companies surge. And now, GE Vernova, the energy part, right? Power, wind, electrification, they're right in the heat of this AI discussion, right in the middle of it. So, yeah, it's what a fascinating turn of events here.
It's a fascinating story, and you mentioned that $114 level, or $115 around there. Yeah, JP Morgan Chase's new price target is 1,000 on this one, so we'll see
What the
where
fuck?
that lands come the end of next year. All right.
How'd I go up so high?
This is what I thought when I saw this story. This is going to sound so cheesy, but oh my. I was like, what? According to the information, DeepSeek is using forbidden NVIDIA chips to build its next model. So we're talking about not the H200, but the newest, most advanced ones. Tom, what's your take on this?
Yeah, the company came out and basically stated that, it seems far-fetched.
Oh, that's why,
that
because
there's
the
smuggling
date.
going on. Well, the company might be the last one to know on this front, because there's been speculation for the last year and a half, 2 years, that
I don't know how I
shell
changed the date
companies
on
over
that.
in Singapore are selling the
Wow.
higher-end chips to Chinese companies. I mean, it's probably, I'm not going to say it was easy for them to do, but it's probably taking place. If some company wants these high-end Blackwell chips, there's going
What's
to find
going
a
on
way
here?
to get it. And for NVIDIA to come out and say, hey, we don't see any signs that there's smuggling going on at this point, that seems a little bit naive to me at this point. It's a story. It's not founded by any stretch of the imagination, so you got to take that into context. The stock's down here a little bit. It's relatively flat on the week, but this is that fits and starts that's going on. If you look at their growth rate last quarter, over 60% for EPS and 60% higher than a year ago in revenue. And then you start taking a look at everybody trying to push back on this stock. Valuations aren't as high as they were. They're still right there in the mix. But, for NVIDIA, it seems like even good news can't get this stock kick-started at this point, but it's just another story.
What does it keep
that
going
maybe
up there
brings some
for?
headwinds, into what they're trying to do. Jensen Huang wants to expand to be able to sell these chips to China and other countries where the restrictions are in place. But yeah, until that happens, until we get some clarity on that, maybe it's going to be fits and starts for NVIDIA at this point, but you can't kind of bash against the results that they've had over the past
Why is
couple
it
of years.
doing that?
Yeah, and it looks like NVIDIA is hitting a speed bump off of this report. And we haven't talked about DeepSeek since earlier this year, and it felt like it moved to the back burner. But now with this information report saying that there has been some smuggling of the Blackwell chips, these are not the ones that President Trump said could be shipped over there, obviously with certain parameters around it. Kevin, what's your take?
I think, people that don't believe that there's a black market, I think Iran sells oil on the black market. I think Russia sells oil on the black market.
I'm trying to figure out why it keeps going down to that other date.
On the black market, and I think if you don't think that's happening, you're a bit naive. And so the U.S. has got to do their best to police these markets as best as they can and make sure China's not getting the most advanced chips. But to think that some of these aren't slipping through the cracks feels a bit naive, Diane. I'm relatively sure this is happening.
Okay, let's talk about another member of
2
the
burps in a row.
You got Amazon higher today. Those shares moving a little bit higher. Instacart is moving lower. This is after Amazon announced it's expanding same-day grocery delivery to more than 2,000 cities and towns. So it's expanding its footprint here. And we've been having this conversation recently about how Amazon is competing against a variety of segments, and one of those being Instacart. Tom, what's your take?
Yeah, this story was kind of dropped yesterday a little bit on Instacart.
Why does it keep going around?
Amazon was going to expand their footprint. I think if you take a look at it, I've been doing a lot of Christmas shopping on Amazon, and every time I put an order in, what pops up? Hey, continue shopping, and got all these, perishable items that come up right on your feed. So, yeah, this is going to hurt. And you look at the reaction not only from Instacart, but from Uber. And then also DoorDash. They're getting hit pretty good here today, based on the fact that Amazon's going to get into your business. They're going to disrupt it, and that's what they're doing now. This might be a better way for them to kind of monetize that noose around their neck with Amazon or with Whole Foods when they purchase that. They haven't really been able to monetize that as probably as much as they want. But this is a game changer for some of these delivery companies. And logistically, Amazon, it seems like it would be a layup for them to get into this business and expand this portion of their business. As Kevin and I have always said about Amazon, you don't want them in your news feed saying that they're going to compete in an area where you're doing pretty well. So yeah, not surprising that we're seeing some weakness in these delivery stocks.
And that for Instacart, it takes its gain year-to-date down to single digits because it was up double digits year-to-date. Amazon certainly needed some kind of win because we've talked to analysts after analysts who said, okay, they're going to finally catch up in terms of the Mag 7. We've been waiting all year for that. They haven't really caught up yet, but maybe this is a potential tailwind. Kevin, what's your take?
If you watch this show a lot, you've heard me say this before. If you have high margins or if you are a middleman, Amazon will attack your business eventually. They're coming for you. And this is just, remember, Instacart's just the middleman, taking groceries, delivering them to other people. And that's a prime candidate to be attacked by Amazon. It's why Amazon's getting into healthcare. It's why Amazon's getting into all these businesses. They have the infrastructure and technology to streamline these businesses and make them more efficient. Not really surprising. If it's a middleman or if it's a high margin business, expect Amazon to get there eventually, Diane.
Okay, all right. Well, we'll be on the watch for that. Shares of Amazon moving higher by more than 1% today off the back of this development. Coming up, we've got bull versus bear. The guys will get their example trays put together for Oracle. It's got its earnings due after the bell today. We'll have more Fast Market on the other side of this break.
Do-do-do-do. Okay.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Oracle is on deck to release its quarterly report card after the close of trading today. Here's where expectations stand. Analysts are projecting earnings of $1.63 per share on revenue of just over $16 billion. The big question will be, how well can it service its debt on its balance sheet, and what does CapEx look like? Oracle's considered the leverage bet in AI, and concerns around that have been a headwind since its last earnings report. But the stock is still up year to date and outperforming the broader market. Time now for the bull-bear tug of war. For that, we want to welcome back in our co-hosts Tom White and Kevin Higgs. It is bull
We pulled back to support again.
Got to talk your take on Oracle. Kevin, I'll start with you. You heard kind of the setup going into this. If you looked at it on a one-year basis and just looked at the percent basis, it looks great, but that doesn't tell the tale of the full tale of the tape. What's your take?
Yeah, since September 10th, this stock has gone from $345 down to $200, and now it's drifted up to $220 ahead of earnings. The last earnings report, you see the massive move that this had. Expectations are relatively low because the stock is sold off. I think that this is going to be another really interesting earnings release for Oracle. Do I know which way it's going? I have no idea, Diane, but I think it'll probably move the expected move over $20. So that's just under or right around 10% move. That's big for a $200 stock. So I think everything that they have going on, their key role in AI and cloud, they're kind of a hybrid AI cloud. I don't know if that gives them more of a valuation or less, but boy, they have a lot going on, and they tend to win some of the things that they're involved in. So I think this is a massive.
Whatever I did, I got it back to normal.
It'll be probably the biggest of the.
I don't know what I did.
Okay, Tom, what's your take heading into this?
The increasing use of debt to fund the capital spending in the AI race has shaken investors. A price action on Oracle over the past month and a half, since Kevin mentioned those highs that we saw about $345 in September, it's just been dismal. And that's, a concern for investors because the valuations are still high. Remember, 2 years ago, this stock was $80. So we're still at $220 at these levels. So it's had a great run, but it's pulled back 36% from those all-time highs in September.
Yeah, but when they pumped it, it said they were going to the moon.
Debt, they just, financed $18 billion. Citigroup came out with a note. They said they might need another $20 to $30 billion to continue to build out these data centers that they're reliant on at this point. Remember, their remaining performance obligations up to $455 billion.
IRBT's moving.
On the back of a $300 billion investment. from OpenAI, or that partnership with OpenAI. Does that even come to fruition? And that's what the questioning is going on from investors is this actually going to happen? Because is OpenAI going to be able to finance all these projects that they have and these partnerships that they have within the data center build out to enhance AI? And I think that's a real concern here for investors. Kevin mentioned implied volatility levels really elevated going into this report, over a 10% move either way in the stock going into the report is reflective that investors are uncertain here, even with this massive bear market pullback that we've seen from those all-time highs. The stock's still up pretty significantly over the last 2 years, and there's going to probably be some movement, whether it's from the Fed or whether it's from Oracle earnings for the overall market.
Yeah, and Oracle, I'm sure, would like to see that cut from the Fed today and more to come, especially given the situation with debt there. All right, let's get into the example trades. Kevin, let's start with yours.
So the example trade that I'm looking at here is taking advantage of two things.
BBGI is moving again.
Move, $21.90. It's currently, it just downticked to $21.60. But the front month implied volatility, or the front expiration, 169. The second, 95. So a big dispersion between those two numbers. So, do I know where Oracle's going? I don't, Diane and Tom. And I think the trade that I put up here, the paper money trade, shows that. I looked at something in the double calendar family, which means I calculated the expected move just over $20. And then I did the 1 week $245 call calendar and the 1 week $200 put calendar. So I've got a move of about $45 if you move the strikes. But you're looking for a move, and you're looking for a move towards one of these strikes. Now, the last time it moved way past these strikes, so you've got to be careful there. If you think it could go further than $20, this might not be the right trade. It collects a lot of theoretical theta because you're selling that front month expiration. But Tom, I think I'm pretty clear here. I have no idea where this stock is going.
I love that, Kev. It's the need to move strategy. You want to move about that one standard deviation. This strategy allows you to not have to pick the direction, right? You could be, right on either side if the stock goes up or down. You just want to go about that one standard deviation. But let's break Kevin's trade down. December 19th, monthly options that expire in 9 days. Buying the 245 call, buying the 200 put. And then in the near term, December 12th, weekly options that expire in just 2 days. Sell those same strikes. Sell the 245 call, sell the 200 strike put. Double calendar position, 1 week wide. On this, you're paying roughly about a 245 debit. There's your risk, $245.
Held the 200.
That you can see there from the risk profile. The apex of profitability is either at or near 200 or at or near 245 on this one. So you can go either way. You just don't want any big 2 or 3 standard deviation moves either to the upside or downside. Your break evens on this one.
Get my water and I'll be right back.
185 maybe on the downside, and maybe about 260 on the upside, where you can still be potentially profitable. The 3 things you don't want to happen in this type of strategy: you don't want the stock to kind of consolidate here at or near 220, or you don't want that big, massive, $40, $50 move to the upside, or that $40 or $50 move to the downside, or even more, because then you start getting away from potential profitability on that one. Kevin mentioned it's 245 debit on this. It gives you exposure to the upside or downside. So this is your bull-bear debate right here. You just don't want an outsized move. And Kevin mentioned that vol dispersion. That's what lowers the entry point price on this double calendar position. But you still have risk on it, $245 per spread on that position. So that's taking advantage of that vol dispersion. Kev, I'm going to flip it though. And this is a strategy that you can use. My example is going to be bullish. You could use it for a bearish type of stance also if you flipped it and did a puts. But we're going to look at a call diagonal here, just 1 week wide. We're going to use the same option series that Kevin did. Going to go out to the December 19th monthly options here. Buy the 220 strike call. It's basically at the money. And then go up about that one standard deviation, which is just about 20 bucks, sell the near-term December 12th weekly 240 strike call. So a bullish $20 wide call diagonal. You're paying roughly, we got $8.50 debit on it. It's probably trading closer to $8.20, a little bit cheaper because the stock's moved down a little bit. But the debit you pay is going to be a risk, 850 bucks per spread on this. Anything above that 225 level is going to be potential profitability on this one. So this is more aggressively directional. Both trades could actually profit if the stock goes up near 240 on this type of positioning, if you kind of think about it. But that vol dispersion lowers the entry point price. So Kev, this is a $20 wide call diagonal. I'm paying less than $8.50 for this thing.
Yeah, you know, this is a better trade if you think it could move further than the expected move to the upside, right? Because this wouldn't go up and then come all the way back down, because my trade pinpoints that 245 strike. If your stock, if it goes to 260 or 280, your trade stays profitable on the upside. The trade-off is you pay more for it, right? But there's depending on your opinion, this sets up a trade for everyone's opinion on this trade. It's a diagonal. It's basically the same as a calendar spread with just the embedded vertical spread in there. So yeah, a bunch of good ideas for whatever you're thinking about Oracle, Diane.
Yep, and if you think about this, Diane, I said this is the bullish call diagonal example. If you're more bearish, you could buy the 220 strike put in December 19th and then sell the December 12th weekly 200 strike put. That would give you exposure to the downside, probably going to cost you roughly the same amount. But what lowers the entry point price on this directionally bullish trade that we've got up here is the fact that that vol dispersion, what you're buying in the longer term options versus what you're selling as far as implied volatility levels. But bull bear debate from Kevin and a bull debate from me on this one.
Choose your own adventure. I like it. And then Tom, also, what I find is interesting is leading up to your example trade, one would think you would take the bearish take, but there you have it. You never know what we're going to bring you. We got cash tags coming up. The team from Likefolio will be along with new data on Adobe. That stock's been a major underperformer year to date. Keep it right here on Schwab Network. Fast Market will be back after this break.
Hi, I'm Alex.
I'm Jane.
And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King, all alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Likefolio. Taking a look at Adobe today, and for me the question is there a spark from Firefly? Because listen, shares have underperformed year to date. If you look at it on a year-over-year basis, it's even worse. Landon, what's your take based on your data?
Yeah, this has been a pretty rough year. I mean, you look at a year ago, the stock was trading at 550. I think it's about 344 right now. So yeah, tough times for Adobe investors. And actually, you look at earnings, they have traded down on 7 out of the last 8 earnings reports, including the last 5. And now the last report, they had a little bit of a pop up. It ended up down on the day, sold off. Revenue was up 11%. AI revenue passed $5 billion. AI influence.
The prison guy is on.
So a pretty good report. But I think that a lot of people are just concerned that maybe it doesn't stick, or maybe there's a lot of competition in AI. And really, when you think about what they're producing, all of the tools that they have, if you didn't infuse AI into all of Adobe's products, then they're going to get beat out by some competition. So they have
you think so?
Go into the AI path. They are. They're doing a great job of it. And you mentioned Firefly. That's leading the way. I mean, you look at how many times Firefly has been used. I think it's up to 29 billion now. You can create images, video, audio, any kind of digital assets. And this is a good chart. It's not great. It's not ramping up exponentially as you'd like to see it. You can kind of tell that it is increasing at the rate of increase. The increase rate is going up, but it's not really exponential. It's not growing extremely fast. That looks different than like a GPT chart, for example. However, they are doing a good job of integrating AI and making all of their products better. They've got it into Photoshop. They've got it into Illustrator, Express, even the PDF reader Acrobat is using it. They've even opened up an LLM optimizer so you can get your website viewed more as a recommendation when people start searching with LLMs instead of Google search. So they're doing a good job of integrating it, and everything that we see is showing that it's starting to pay off. Users are really using it more. Last quarter, their consumption was up 32%. The custom model was up 68%. So really getting a strong move in the right direction. I think people are concerned with 2 things. One is competition. Google Gemini is doing great, and anybody can create new products that are similar to Photoshop now, which used to be their bread and butter and their separator, but now with AI, a lot of things can do the job that Photoshop could do, so they have to continually stay on top of that. So competition, and then the other thing is compute costs. These queries run by users are expensive, and they're obviously they have to do it. Adobe has to offer this in order to stay competitive, but it's going to be expensive to service these clients. And so what are the margins going to look like? I think those are the questions that people want to see. Is the adoption continuing to increase? Is the rate of increase continuing to increase? That's really important. What do the costs look like, and what's the competition landscape out there? Now, just looking at the stock, seeing how much it's off, I think it's off like 37% from a year ago, maybe 22% year to date. So really, poor performer. And like I said, it's been trading down on nearly every earnings report in the last 2 years. So, it could be sort of primed for that bleeding has stopped and we're turning the corner with AI. I think that's what investors want to hear. So we'll see if that's what comes out today. But just based on the data, we're seeing quite a bit of a divergence between the demand from the consumer and the reaction or the expectations from the investor. And so right now we've got demand at plus 7% on a year-over-year basis, which doesn't sound great, but it is positive where it's been negative for a long time. And the stock, like I said, is down about 22% year to date. So that divergence is starting to get our attention. The stock is looking a little bit cheap right now, and we're starting to lean to the bullish side going into this earnings report.
Landon, I'm going to read off some of their competitors in this space. They've got different ones, right? They've got different silos of revenue generation. Microsoft, Google, Amazon, Salesforce, Oracle, Canva, Autodesk. That's not good. That's not good on any stretch of the imagination, because a lot of companies have, subscriptions with these existing companies. You mentioned, these image
bald-headed man.
AI chatbots that are, killing them at this point.
You're paranoid.
And valuations are probably normalized now. Forward PE on this is about 15. And I remember when this stock was trading 4 years ago, it was trading $699. We're down 50% from those levels. I see that your data is reflective that you've got good metrics as far as, you know, the consumer and your data shows, but at the same time, competitive pressures have really hurt this stock, and maybe it should have, right?
No.
Absolutely. I mean, this, you know, it's kind of like if your son or daughter was thinking about going into graphic design as a major, you might shy them away from that. Say, hey, you know what? A lot of people can do those things now with just a tool because it's so powerful. You don't have to spend hours and hours learning Photoshop. You can just tell something that what you want it to build and it builds it. By the same reason, I think a lot of people are saying, well, why would I invest in Photoshop, Adobe, even with Firefly and all the other products that they have, when a lot of other people can build things like Canva is relatively new, right? But now they're taking a lot of market share, for example. So it is, I think competition is the biggest thing now. The other side of that token is they've got the user base, right? So they have a ton of people that have used Photoshop for a long time, that have used Illustrator, Express, and all of these different tools for a long time, and now they're way more powerful, and they're as good or getting as good as a lot of the competition, and they're familiar with those products. So I think that's the edge, right? If this was a startup, and you know they were trying to raise money, I don't think they would get a sniff. I think that everyone would say, well, why would anyone use you versus someone else? But they've got this massive user base that's used to their products, and now their products are catching up. Like all their friends were naysayers saying, why are you still on Photoshop? You can just plug it into one of these image generators and it's better. But now Photoshop is catching up. It's good, as good or better. Yeah. So those hardcore fans of Adobe can say, you know what, I'll stick with it because they're continuing to improve. They're pouring so much money into AI. It's getting better. My experience is getting better. I think that's the bull case, and the bear case is the list of competition you just listed off. And is it going to be tough to acquire new customers? Yeah, holding on to some older customers maybe, but getting new customers is going to be tough. And I think their margins are going to get squeezed.
So, Landon, I'm gonna. When you look at the stock, obviously you can't ignore the performance. So I think I hear what you're saying, especially about the competitive landscape. I think that makes sense because you have to pay attention to the free options. But I don't think they're as good as quality design, right? When you use some of these free options, you got an extra finger, an extra hand, whatever, that shouldn't be there. And so when you have actual good design, or you put something into, because I've done this before, where you put something into a free image generator, it's not what you want, so you end up hiring someone to do that for you. So I still think there's a place for that. But I'm curious to know, is this about a timeline for Adobe? In other words, weak performance for a little while longer, or starting to turn a corner after they figure out how to stay competitive? What's your thought based on the data that you see?
I think that's what investors need to hear, is we figured it out. AI usage is ramping. We're holding on to accounts. We're signing new accounts. Our stuff is just as good as everyone else's, and they're willing to pay for it. It's better in some cases. I think that's what investors need to hear, because the fear of competition, I think, is very, very scary. There's so many names, so many big names, and we've all seen, if you go back a year, what AI could do versus now in image generation, video generation, it's laughable. I mean, the increase over that last year has been unbelievable. So they have to incorporate it. They are incorporating it. They're doing a good job. And remember, before AI, they had the best tools, right? I mean, Photoshop was hands down the best image editor in the world before AI came out. And so now they're adding AI to it. So it should get back to that #1 spot as long as they do a great job. And I think the usage of Firefly is making the case that it is getting back to that #1 spot. And so you can see here on the chart, the blue line is the consumer demand, that dotted line is the stock price. That's the kind of divergence we're looking for when we make a bullish call. So this is telling us that there's a chance that they come out and put up some numbers that put the fears of the investor to rest and say, you know what, we figured AI out, we've got the greatest platform, we've got the greatest tools and services, and people are still willing to pay for them, and we understand how we're going to be competitive and move forward in this new environment. This has been a huge monkey wrench into the system of a great set of software tools that have just been the kings for a long time, and now AI is just disrupting like crazy. But it looks like Adobe's making the right calls, and I think that they have a chance to say, hey, the bleeding stopped, we're turning a corner, and the future's bright. And then, all of a sudden, 340 looks like a cheap stock price on this one. So, I don't know if I'd want to hold this long term, but I think on a risk reward level, I think it's definitely worth a bet to the upside on this particular earnings report. I think it's more likely up than down, and I'd be willing to bet on that.
Oh, you will?
Hey, interesting. All right.
Yeah.
Wasn't expecting that in there.
Oh,
That's
I wasn't
Landon
either,
Swan,
baby.
Co-founder of Lightfolio. Thank you, Landon. Now, for the trading perspective on all things Adobe, let's bring Kevin in back in the conversation. Tom, he brought a lot of stuff, and so, like I said, I didn't expect him to end where he landed on Adobe. What's your thought before you guys get into the example trade?
Yeah, the bar's low on this one, you know, if you look at their data, especially that last chart that showed the stock price versus some of the data and the divergence that you've seen, pretty spectacular.
I'm gonna lay on my back for a second, and I'll be right back.
Their industry, digital media, supposed to grow about 8%.
Powell's coming up soon.
Digital experience,
I'm gonna
supposed
be
to
ready
grow
for
over
him.
10%. Subscription revenue, that's supposed to grow 10% year over year. So they're still growing, and the valuation's really low. Kevin, you look at this one, the option rate, it's at $340
Kevin Hickey.
stock. It's still pricey on a dollar basis. The option market's pricing in about a plus or minus $23.50 move, and the stocks have post earnings. How do you want to look at this one from an example trade?
Yeah, my view on this, you guys have made several different arguments. My argument will be the PE argument. This stock spent most of the early 2000s between 50 and 60 PE. The lows was 33 PE. Now it's in the low 20s in terms of PE. So this has turned into a value play, Tom. So I looked at the expected move, right, about $23, and just looked at something around the $365 strike. And so I did, again, the 1 week call calendar, only spending $1.50, actually even less than that now, for a 1 week calendar where, if you're correct, this could be a multiple winner, Tom, if it moves up towards $365. So an inexpensive call calendar if you want to play the upside. The risk is that it goes through that 360 strike and much higher.
My question is, for a poll, are we going to dip before the Pow Pow speech, or will we dip after the Pow Pow speech? Now I see a 1, 2, 3 bits. Do you see what I see off the 200 SMA? Chalival. Jim, is it true that you were singing opera back in the day? Yes, I sung a little opera back during my acting period, back in grade school. Me and Brad Pitt competed with each other, and I had a better voice than Brad Pitt did. He couldn't sing. Every time he sang, the worms would dip in the ground. Do you see what I see? Jim, is that a 1, 2, 3 fallen wedge? How did you ever freaking guess, man? I'm telling you. Woo! The 6880s are now at $5.50. If I was to make a business decision, I would buy one contract at that price, or maybe a little bit cheaper. It's too late now. It's already broke out. I fumbled around and stumbled around, and it was too late. Probably could have got that a lot cheaper, right around $5. That wind's something else.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check on where markets stand as we get closer to the bottom of this hour. We've got the S&P 500 hugging the flat line, up by less than 0.1%. The Dow's got a gain of about 1/3%. NASDAQ 100 softer by 0.25%. Russell 2000 has a gain a little bit more than 0.1%. Again, investors seem to be largely a holding pattern ahead of the Fed's decision on interest rates. Synopsys is set to report its quarterly results after the closing bell today. Wall Street is expecting the company to log revenue of $2.25 billion. Now, you remember, NVIDIA recently announced an investment in Synopsys and gave it a lift, increasing 12% this month. The stock's still an underperformer year to date. Time now for the breakdown. Joining us for that, we've got George Silla, senior markets correspondent, for the fundamental look at Synopsys. So, George, is the bar higher now going into Synopsys results today?
Yeah.
Good question.
Well, that's a good question. I think, it's an interesting situation for this company, which is actually the largest semiconductor design solutions firm. They do compete with Cadence Designs and Siemens out of Europe. So, for what it's worth, it's an interesting situation, like I said, because the stock is actually down about 7%.
I'll be right back.
Over the last year. It's underperforming its competitor Cadence. And I did notice, too, if you look at the EPS numbers that you listed, they're expected to be down about 15% compared to the same quarter last year, where the company earned about $3.40. But sales are expected to be 37% higher. So I suggest that there seems to be maybe some internal operational efficiency issues that the company's been going through. In fact, if you look at some of the news reports for Synopsys as of late, they are cutting back some of their workforce, as well as shutting down some unprofitable areas of their capital expenditure. So they seem to be firming up their profitability, but top line sales have actually been increasing, and they are expected to continue to increase. For next fiscal year, they're anticipating over $9.63 billion versus this year, they're expecting only $7 billion for the full year on a sequential basis if you take the summation of the last 4 quarters, including the one they're about to report. I think this is an interesting case where this is either a good opportunity, sort of a mispricing of the stock relative to competition, or maybe a situation where there's an accurate pricing going on with the firm. If you look at their business in networking and high bandwidth memory, as well as other headline aspects of chip design. Look at Google, look at Broadcom. These are 2 major players in the chip design space, in the semiconductor space. And so, Synopsys is one of these companies that is partnering with these major semiconductor design companies. And again, the partnership with NVIDIA is quite promising for the business. But nonetheless, we may be in a situation where estimates for the quarter, which are again supposed to be down compared to last year, are maybe fully expected. In other words, the expectation for a drop in earnings is already priced into the stock, considering the stock is also still down about 7% over last year.
So it's interesting, because I wonder, where you take it from here, and obviously guidance will be important. For instance, yesterday you had an analyst, Rosenblatt, and to me they kind of, are playing both sides of the fence. They upgraded Synopsys to a buy, but they lowered their price target. Still higher, obviously, than where it is.
Yep.
I shouldn't say obviously. It's 560. So they see some, potential momentum from here. What's your final thoughts on this one, George?
Well, it could be, and this is where I say it's kind of a tricky one because if you look at the sales numbers, they're actually quite good. So when you have sales numbers, in point here, about 37% compared to last year, I did a comparison of the fiscal year we're in for the business compared to next year. They're still expecting high 30% sales growth, with earnings growth going in between the 2 years only 9%. So to me, that suggests at the very least that there is some operational changes going on. It could be technology changes, it could be high CapEx needs, which again may be priced in. And that's why I think some of these analysts are still constructively bullish, irrespective of the price action that we've seen, especially in the last couple of quarters, or at the very least since July. So again, that's where it's tricky, because I think this could be a possibility where it's really underappreciated and it's not firmed to the price it should be. But at the same time, one could question why those EPS numbers are not very good compared
that
to
was a
sales
bounce.
growth numbers. Again, it could be accounting issues, it could be a vast array
Up
of
to
different
200.
variables you have to consider. But nonetheless, if there's an increase in guidance for EPS alongside some similar guidance for revenues, we may end up seeing a nice trend reversal in this thing.
All right, interesting. Everyone to watch is not just about Oracle after the bell today. Thank you, George. That's George Sillis, our senior markets correspondent. Let's get Tom and Kevin back in here for example trade purposes. So Tom, you've got the example trade this
Boom.
week in synopsis. What's the approach?
Yeah, you take a look.
The 6880s at 550 to 720. Off the 200, off my 1, 2, 3 triple alert.
coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network.
Schwab.
Real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets,
We have 1 hour
rates, and more.
until the pow comes
Where
out.
markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Welcome to Next Gen Investing, and of course, happy Fed Day. I'm Jenny Horn alongside Alex Coffey. And
You
Alex,
reminded me, I forgot. I was like, what holiday is it?
I was like, guess myself for a second. I was like, wait, no, it is Wednesday. It is Fed Day, yes. So we have, of course, some updates from the Fed coming in just about an hour here, but markets, as they typically are, feel like they're holding their breath a bit as we'll wait for the major catalyst this week, and also then later today is when we get a slew of some bigger tech earnings after the close. So it does feel like today is really what ramps up some of the market activity for the week.
Yeah, and more of the same though. I mean, I'm not putting a bunch of stock into any of the last three sessions just because so much of this week is going to be determined in the next couple hours. But you're starting to see that dynamic where there's a rotation out of the NASDAQ into the Russell 2000 on balance. And to me, alongside kind of the bounce back you've seen in crypto, it isn't a deleveraging or de-risking out of these AI stocks. It's just a changing of the risk. So it's truly rotation that we're seeing, and it's going to some of these more interest rate sensitive areas of the market, which does make sense with one of the big catalysts being the FOMC and the potential rate cut that we're going to see. But, you know, like we often say, especially now, this next hour, I'm putting almost no stock into anything that the market does.
Oh, really?
I wouldn't be surprised if we are back towards unchanged the next hour, but I ultimately don't think it's going to be the determinant of how today goes. I think that's a controversial thing to say. When we get the announcement and they redline that statement and there's the dissenters or there's not dissenters at the top of the hour, about 59 minutes from now, there will be a reaction. And then ultimately, Jerome Powell will take the stage and they will shift the narrative to whatever they want it to be, and the market will have another reaction or five. And, you know, in 3 hours from now, we're going to be talking about a very different story. Even
Yes,
if
we
we're
are.
trading 8 points higher or whatever we are right now,
that won't have been the story of the day. It won't just be an unchanged market until the close. There will be movement. It'll move around, we'll react to things, and there will be a story that's written, but you can't write it until we get Jerome Powell's words.
Okay, and I do completely agree. Not to say some of these individual equity movers don't necessarily matter, but I do think good to keep your finger on the pulse of these markets as things do trade perhaps quite differently in about an hour. I'd say even and more so an hour and a half once we hear more commentary from Jerome Powell himself. And so we have a lot to look forward to over the next several hours. A lot of time left, of course, in today's trading session. But as always, we'll kick off with some of these movers to keep on your radar. We will also then be charting and trading CoreWeave as well as Rigetti Computing, which both names seeing some significant pressure today and both operating in the generative AI world. We'll also discuss the move today to the upside, a phenomenal move to the upside today in GE Vernova, which made new highs. We're up now 13.5% on some raised guidance. We'll also discuss the latest from Palantir. They did secure some major contracts with now the U.S. Navy worth almost $500 million. And last but not least, we'll close out the show with a more labor focus as we do preview some of the expectations for the Fed. Of course, then we'll be just minutes away from getting that key announcement from the FOMC.
Yeah, I'm excited for just getting through this, right? Like it feels like we're really buttoning up things for the end of the year, and it seems like getting through this Federal Reserve meeting is going to be key to starting to do that. It'll really set the stage, I think, for what next year potentially starts to look like. But we still got to get.
We pulled back to support.
It's a man in charge, yeah. Moving markets, shaking things, let's roll. Oh, yeah. Moving markets, shaking things, let's roll. Jerome Powell in the house making big calls. Chair of the Fed, he's the one who stands tall. Interest rates climbing, inflation's running wild. Always fighting fires, keep the economy riled. Behind the curve, they say he takes a step slow. Balancing the scales on the Wall Street flow. But when he speaks, you know the markets react. The cat and mouse dance, keeping us all intact. Powell's rhythm, feel it in the trade. Shaking up the markets, don't let it fade. Riding on the waves of financial tide. Behind the curve, but he's our guy. Yeah. Hey, it's the man in charge. Yeah. Moving markets, shaking things. Let's roll. Jerome Powell in the house making big calls. Chair of the Fed, he's the one who stands tall. Interest rates climbing, inflation's running wild. All this in charge. Yeah. Moving markets, shaking things. Let's roll. Jerome Powell in the house making big calls. Chair of the Fed, he's the one who stands tall. Interest rates climbing, inflation's running wild. All these cotton fires keep the economy riled. Behind the curve, they say he takes a step slow. Balancing the scales on the Wall Street floor. Oh, when he speaks, you know the markets react. The cat and mouse dance keeping us all intact. Powell's rhythm, feel it in the trade, shaking up the markets. Don't let it fade. Riding on the waves of the financial tide. It's
to you, Jerome Powell.
Yeah, moving markets, shaking things, let's roll. Jerome Powell in the house making big calls. Chair of the Fed, he's the one who stands tall. Interest rates climbing, inflation's running wild. Always fighting fires, keep the economy riled. Behind the curve, they say he takes a step slow. Balancing the scales on the Wall Street floor. But when he speaks, you know the markets react. The cat and mouse dance keeping us all intact. Powell's rhythm, feel it in the trade, shaking up the market. Don't let it fade. Riding on the waves of financial tide. Behind the curve, but he's our guy.
Jenny Horney is up.
Seen it take the route of some of the year's most recent meme stock moves, and why some of the underlying of nature of their retail business just frankly isn't healthy. I mean, we saw software sales contract 27%. We saw hardware and accessories contract another 12% year over year. Now collectibles were a huge bright spot, up 50%, but facing also easier comparisons than what we saw a year ago. So we also know they have a pretty substantial holding now in Bitcoin, although I was reading one analyst's estimate of this where they see it only impacting GameStop at this point, given, I mean, its current business performance and you know, some of the conversions around Bitcoin, that although a $10,000 change even in Bitcoin's price, they estimate only does affect the value of GameStop by roughly 10 to 11 cents per share before taxes, which actually is quite substantial, but it goes to show that they do still have this sizable exposure to Bitcoin, trying to be like a strategy, but just not resonating the same way with the street.
Yeah, in many ways, the meme stock nature and where GameStop found itself as a result of that was like a life raft for this company. It gave them a tremendous inflow of capital. Now, ultimately, what they're able to do with that, and if whether or not they just built a higher floor for the company, or they have some sort of upside down the line, remains to be seen. But it's almost like this company has sort of just faded to the background again, because this is a company throughout the last decade has had an average absolute value of its price change around earnings over 10%, basically saying it moves on average more than 10% one way or the other on earnings. Well, of the last 5 quarters, if you were to close right here, only one of those 5 quarters was over 10%, and it was an 11.6% move like 4 quarters ago. You've now had 2 consecutive under 5%. It's just an afterthought. And I don't know if that's a good thing or a bad thing for this company. I don't know that just as an investor in it, that there's a lot from a business standpoint that is generating a tremendous amount of returns outside of when there's that excitement around a roaring kitty or volatility. And it just doesn't have that same volatility right now. So not a bad thing from a stability standpoint of the company. I think that they are far more stable than maybe they were, 3, 4, 5 years ago. But that stability almost works against the company, that the volatility is what made it interesting.
It is, and I think that that's a really good point. That's also how I was looking at things here. The short interest has also come down, which would tell you, yes, a sign of a more mature company, because you don't want your stock to ever be, seen as a short target or like a short squeeze play. But they did also add an interesting element to trading activity that, yes, detached from fundamentals, without that, pretty major endorsement from the meme stock crowd. It's just, I agree, lackluster.
Yeah, well, I would say, I know what you mean by mature, but I almost use the word stable instead, because it's like the instability, the questions, the people thinking, hey, this isn't worth anything, the business model is struggling, how much cash do they have? Those questions generated the opportunity for it to be a meme stock. Because all along, those who were, on the Reddit platform, on the Wall Street Bets forums, the Roaring Kitties, they believed in GameStop. They thought, hey, this is, a company that is stable and has potential, and it's being underappreciated, and that generated the excitement. It was like, there's these short, positions that are off sides, and we're going to basically lean on them and force them to cover. It's going to generate this excitement. Well, if everyone's kind of like, there's not a lot of growth, but the company is stable, it doesn't have that kind of kindling for excitement anymore.
I completely agree. That is, I think, a great way to frame. It's just like the lack of. Right now, there's a lot of, areas of the market that see this sort of hype cycle, but it just isn't really coming into some of these meme stock players like the way we were used to back in 2021. AMC, we haven't looked at it in quite some time, despite still, I'm sure, having a very loyal.
Safe to say GameStop better performer than AMC at time? Yeah.
Safe to say that different. I would say that I tie them together because they're both so heavily correlated with the initial.
Yeah, meme stock 1.0, 2.0 even.
Yes, well, very, very much different business models, different, even guidance going forward into this year. But also, our next name is Cracker Barrel, which was at one point almost trading with meme stock characteristics, because we saw that huge backlash in regards to them changing their logo. We saw, the stock posting a pretty substantial loss earlier today, but then actually recovering some of the weakness on the session. So it's actually been a really interesting day of trading just in today's session for Cracker Barrel. Now, what has been a bigger miss for them was the fact that they basically turned on a lot of their shareholders and a lot of the values that established this company. And then, straight away from that old-timer logo, they then went back to, of course, the old logo to make their shareholders and really just, customers happy. But they did highlight that the results were below their expectations, as they had unique and ongoing headwinds, saying that they have now adjusted their operational initiatives and as well as their marketing to ensure that they are delivering more delicious food and exceptional experiences, as well as hopefully boosting their financial performance. So
here's the BBGI on the 5-minute time frame. This is where I ordered it last time, and it kind of pulled back and then went to the upside. Now it's pulled down to and hit the 200 SMA on the 5-minute, and it's halted at 1311 on the way back up. Whoops, 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 whoops. Initial reaction to fullback announcement and statement at 2 p.m. I'm going to say, what's a tough one? That is a tough one. Spy at, was it Spy at the 63? That's a tough one. I'm going to say down then up. I'm probably wrong. By that time, we'll be down. Within 5 to 10 minutes, whatever's high or low as it marks. I'm going to say down. Within the 5 to 10 minutes. That's tricky. That's tricky. We have a poll in the room. The initial reaction to FOMAC announcement and statement at 2 p.m. Eastern Time. And we've got 29 more minutes to figure that out. 39. I voted down then up. Hello, Angel. I missed you yesterday. Everybody left me today. Didn't I tell that to, I needed someone to remind me to wash my underwear. Your dog was sick? Oh. You got to take care of the dog.
kind of have a longer term downward sloping trend line on the RSI. You can see starting all the way back there, trending lower.
CRWV.
Progressively lower highs. That's not exactly what you'd want to see here, so the bulls would want to see that trend line broken and for price to make a push above some further resistance. So now, if we were to look at our volume profile study, it's a bit more messy here. Sometimes there's very clear, distinct nodes. In this case, there are some clear nodes, but they're quite close together. So one area to be on the lookout for right here, near about 74 or so, 74, 75, that is the area to the downside where the bulls would hope to find a foothold. We also have this area here near 91.50 or so, that lines up with the current price activity area here. And finally to the upside, around 105, that's a further area of potential resistance.
Okay, yeah, and a lot to, I think, definitely look at when we discuss, of course, the chart of CoreWeave, which is down now about 3.5% on the session. And now, as we do look to trade this name for example purposes, Alex, walk us through your thinking.
Yeah, we're getting towards that time of the year where we're looking at some options expirations out into the middle of January. So that's what we're doing here. January monthly cycle, that's the 16th of January 2026. 70-65 put vertical, so it's a neutral to bullish strategy. It's a volatile stock, so utilizing some of that higher implied volatility to get quite a ways out of the money, all relative though, of course. Now, with that, it's only $1 credit, so you risk 400 with only a chance to make 100, but your break even's down at 69, so you're giving yourself some cushion, looking for this stock to kind of stabilize and maybe even work sideways to higher over time, over this next month or so for this one. So with that, risk 400, 4-to-1 risk reward, 69 the break even, looking for stability. That's going to be the theme of all the example trades we talked about today.
Okay, so now to shift gears into a similar world, of course, different chart though, and that's spaghetti computing, which has been, I mean, pulling back substantially. It's amazing though that we're still actually, I mean, pretty higher on a year-to-date basis.
Yeah, 58.15, 14 to 58.15 is quite a rally there. But there is one thing I would want to point out in this chart here. It's a situation that's described as what's called a bull trap here. So when you have this extraordinary
bull trap, fallen wedge,
that took us up to these very lofty prices here, oftentimes there will be a pullback to a prior area of resistance. In this case, we can see these old highs right here near 34. That's about where we bottomed out here. And then our next rally came substantially below the old highs here. So that's when the enthusiasm is perhaps starting to wane. This is a pattern to be on the lookout for as a sign of a potential further decline. It did play out to the downside in this case. Certainly not a guarantee. There's never any guarantees or sure things with this type of trading field here. But this is a thing that people, it's common enough that you would be on the lookout for it if you were worried about
bounced off the 200
enthusiasm
EMA.
Dry up a bit for a name like this. So we can also look back and see the 20 level.
You're not speaking too highly of it.
Close, our dark green line. We also had this area of highs that we saw after our gap down. That was the low point that we had in our range, as well as a further high point there. So 14 to 20
it's well behaved
zone here, but we did not come too close to touching that $20 mark most recently here. So now if we were to think about our moving averages, yellow 21 day and orange 63 day, right about here near 28, that's lining up with our old lows here and here that we saw. So this could be a confluence to watch out for to the upside here, a push above that level. Could open the door to that 34 mark once again. In this case, we do have the RSI breaking through its shorter term downward sloping trend line here, but also failing to overtake that 50 midline with any kind of a convincing push. So even though we are still trending up higher, we have given up our resistance area in terms of our price activity, and RSI is starting to falter somewhat. So
SPX.
Now, if we were to think about our volume profile and our volume.
SPX, pay attention. SPX, pay attention. I've been trading SPX. Crowd's going wild here at the sports arena. Washboardjim's getting ready. Didn't you say a half hour before Pal speaks? We're at $5.90. Randy. We have 3 white soldiers. Ginny Horny's up. Okay. We're at the orb. We're at the orb. Dad, how come Grandpa doesn't sleep with me anymore?
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
all the happy faces.
A modern approach to wealth management.
I think that's a funny commercial.
Welcome back to Next Gen Investing. Now we're joined by Marley Caden, of course, host for the Schwab Network, to dive into our FOMO name today, which is a no-brainer, GE Vernova. I mean, a pretty monster move today. As I was saying earlier, pre-market, we were looking to set to make new highs. We easily surpassed that level. And
I'd say Marley's a good addition.
On the sell side today. So Marley, walk us through all the good news for GE Vernova.
You said a lot of enthusiasm from the street, from the sell side analysts. We're seeing a move now up about 14.5%. It just keeps growing each time I look at GE Vernova. Shares are surging after the company doubled its dividend. They increased the scope for their share buybacks, and they raised their earnings projections all at an investor day, and they are being well rewarded today in terms of their stock price. They're now estimating their future earnings beyond 2028 to be $52 billion. That's up from $45 billion. They also raised their adjusted EBITDA margin for the same period
GEV
up from 14. Now, GE Vernova was already one of the best performers in the S&P 500 this year, but they've now raised their per share quarterly dividend to 50 cents, and they've increased their share repurchase authorization to $10 billion.
Kramer had them on this morning.
The company said it expects to grow its total backlog from $135 billion to about
Okay, here's
$570
$570
by the end of 2028, which will
These are the
include doubling of its
6880s.
electrification segment. Backlog that will be $60 billion.
Now, this is the question to ask. Do we trade it 26 minutes into the PAL meeting, or do we wait for another pullback, like Jimmy said? Now, he said initial reaction. I think we're going to react before the PAL speech and then bounce up if we pull back here, if we don't hold this support. So you either jump in at 570, we got a snake breakout, pull back, or we wait. Let's get to the straddle on the SPY. I would rather trade SPY. SPY is a creepy Little sneaky snake. $41? Oh my God. Marley, I love you. I had a hard time at first, but I want you to know that I'll do whatever it takes to be able to get an interview on Schwab with you. And if I can't have you, I'll take Ginny Horney. Alex Coffee's got it made here.
GEV's day went. I mean, this has been an incredible price performance today. But same strategy, neutral.
Oh, there it goes.
Accelerating that timeline just a little bit. Reason being, the weekly options had $5 wide strike availability, where the monthly cycles were locked at 10. So to make this a little bit smaller trade, go into that January 2nd, 2026 cycle, so sort of representing the end of the year. If you believe this stock will maintain its price performance and stay above, let's say 650, which is where our short strike is, 650, 645 through the end of the year, and so you could collect somewhere around $1.25 for that strategy. You'd risk $375 with a chance to make $125. 648.75 would be the break even. Now, liquidity in these options, given the big underlying stock price and the kind of lack of activity in that January 2nd cycle, is something of note. But perhaps this is just an idea, an example illustrating sort of the thought process for that using these prices.
Yeah, Danny, this, only continues to rip here. We're up now 14%. So appreciate it to Marley Caden for that breakdown on GE Vernova, a name that is a clear winner of the session in spite of all the, macro turbulence we're expecting from the Fed. But coming up next, we'll discuss more of a Fed-focused theme, and that's the labor market, and perhaps some of the expected impact we could see with AI looming on the overall U.S. job market.
The 6880s are at $5.90. $6.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way is the best way.
Is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
Where are you going?
Schwab.
I want to pull back,
Schwab, a modern
and I
approach
want
to
it
wealth
now.
management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
I love you.
Morning Movers brings traders the biggest headlines to start the day, from volatile
We're at
overnight
570.
trades to the earliest analyst calls. Get your watch list.
Slash
ready.
ES is at the VWAP.
Morning Movers only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the latest from Palantir. As Palantir is always a volatility generator, it's always worth diving into, especially on some news that they have secured now a $448 million deal with the U.S. Navy. Dan King Hall, the host of Morning Movers, is joining us now to break down the story. So Dan, walk us through the latest here on Palantir.
Yeah, this is welcome news for Palantir. Those shares moving higher off the back of this news of this $448 million deal with the U.S. Navy. And it's kind of, if you will, for Palantir, returning to its bread and butter, because as we know, government contracts was where the company originally had
Double bottom.
most momentum. And since then, it has started to see or seen over time more increases on the commercial side.
$5.60.
You can't ignore what's happening on the...
Okay, Diane, I'm going to have to cut you off for a second, baby. Don't take it personal. But we're sitting here, we're watching the S/ES, and we got a double bottom on the SPX. Now I could take these at $5, the 68.80s at $5.40. But I'm going to wait. I mean, this would be a spot to start. Could probably get a scalp out of it. Now they're at 560. We have less than 18 minutes before the PAL come out. I'm looking for a knife to jump in this trade. As I once said, I would, if I felt like it, I'd get me a starter here at 540, which we were there just a second ago. And then
is a little bit more bigger picture, though. I know you have an opportunity to talk to a lot of traders there, whether it's in passing or on your show, analysts as well, investors. It seems retail, if I use something like Schwab's Stacks, this is consistently amongst the top buys into this narrative, buys into the belief in Palantir, whether it's Dr. Karp and the eccentric nature of him that's almost Elon Musk-like superstardom, or it's the next age, new next-gen technology that they work on that has captivated their attention. What about the professionals? Are they buying into this too, or are they skeptical because of the big price tag?
The analysts that I talked to, hear from, read their commentaries is more on the skeptical, because of the skeptical side, because of this evaluation. They can't ignore the move that's occurred this year in this, because even with some of the bumpiness that had happened recently, it's still a huge outperformer year to date. But again, the valuation of it, the price tag seems to be a little too rich for when the analysts look at it. But again, to your point, retail investors do really like this one, and if they got in at the beginning of the year, they did well. But you're right, I've seen Alex Karp here, and it's funny. He actually seems understated, but at the same time, you see him in interviews, you hear him on earnings calls, and it's bombastic, kind of, or even the eccentric quirks that he seems to have, and investors, especially from the retail side, seem to really like that. And look, the company has strength in both government and commercial contracts, but again, that price tag is where analysts have questions.
Yeah, and I think that's a really interesting sort of summation of Alex Karp. He's so, to me, like, infamous. He's almost like a celebrity. I mean, in our world, he definitely is a celebrity. So I think at a really interesting point about how he's somewhat understated, but some of his commentary, I mean, is hugely why there's so much upside. Really, I'd say definitely driving some of the overall price performance of Palantir. I feel like every single day.
Come on, get on down there.
On a pretty bright spot. But
nice.
So appreciate that, Dan King Hall, for the breakdown on the news today around Palantir. Now, I'd like to welcome in Harley Lipman, CEO and founder of
Harley who?
10 force. A really timely conversation. Harley, thanks so much for being here. And let's start with
Harley.
real expectations for the overall labor force as we head into 2026.
Well, it's going to be a tough labor market, especially for entry-level jobs. Very few people are quitting their jobs these days. It's at a 5-year low, the percentage of people who are voluntarily leaving their employers. So it's going to be tight, but the job market will embrace people who embrace AI. They don't want employees who are uncomfortable or who are intimidated by AI. And remember, AI is not coming after your job. What they're doing is they're coming after the 30% of the work that you do that's repetitive. That's what they're coming after.
Harley, I'm sure you're familiar with the concept of the beverage curve, but for our viewers who maybe aren't, it's basically that if you chart job openings and you chart, where that intersects with unemployment, they kind of have an inverse relationship oftentimes. We've certainly seen job openings come down. Are we at a worrisome point where that's reflective of perhaps an increase in
14 more
unemployment
minutes.
Sooner rather than later in your mind?
Not really. I mean, slightly unemployment will increase, but that's normal. There's going to be no mass layoffs if things stay the same. It's simply that companies are adjusting to the AI revolution, and they would be wise to keep their entry-level employees and retrain them, reskill them. The companies that reskill their employees are going to be the winners. The companies that just go to slash and burn and lay off people, they will lose in the midterm and long term because they're going to lose institutional knowledge. And they're going to lose future leaders. That's why you need entry-level people. And the idea of AI is to boost productivity of your existing workers. So you don't want to replace them. You don't have the robots to do the work, at least not yet. So you need to reskill and retrain your people. So what they can do is take AI to the next level in terms of output and productivity.
So do you think that we could face a real shortage of talent when looking at, say, beyond the entry-level jobs? I mean, more of like the mid to senior level where you're lacking some of these necessary skills that frankly you learn as an entry-level employee with, of course, the introduction of AI, which is a wonderful tool, yes, but it does remove some of the foundations that are required to truly learn to do a job.
Well, companies have to reskill. And even people could help themselves by taking courses online. No one knows a lot about AI at this point. It's so new. So what gets in the way is people get intimidated. They go, oh my God, AI, what is it? And so they tend to be reluctant to learn it. But if you just get the basics, you'll be where you need to be. And again, if you're working for a bigger
I think you're full of crap.
the smarter companies are going to do what we do. We have something called Dev 10 where we train people and reskill them. And we have found that makes the world of difference because clients do need to keep their employees. They just need them to focus on more human-oriented areas such as critical thinking, problem solving, innovation, collaboration, empathy. That AI cannot.
We got a snake breakout set up.
So for those people who have good, EQ, as they call it, emotional intelligence, for people who
685 strikes
can communicate well with customers, those positions are solid. And companies are going to need more people like that. So if you're a leader and you're an innovator, or you're a problem solver, you're a critical thinker, AI is going to give you tools to do a better job. Your job will not be threatened. It'll be all about, like anything, the ROI, what you bring to the table. But AI tools will help you be more productive.
Harley, kind of final thought, you sort of alluded to this in that final answer. It sounds like thinking skills, visionary, kind of seeing the chessboard more than being a piece on the board is the skill set that's going to be valued. Where does that burden fall in terms of getting those skills? Is that the individual going out of their way to find these resources, or do colleges and high schools need to retool their curriculum to meet the modern world?
Well, your last sentence says it all. I think high schools, colleges, employers, and above all, people chart your own destiny. Again, you could be a navigator, you could be a survivor, or you could be a victim. You want to be a navigator. And a navigator means get online, learn a little bit about AI, talk to your employer about them training you. They'll like that you want to embrace AI. Again, companies want people who are willing to embrace
You got a falling
the
wedge?
future. And that.
Shut up. We have less than 9 minutes. Now I'm looking at the 6880s at $5.80. They were at $5.40, $5.50. Now they're at $5.80. We could come down one more time and then do the breakout. 68.38 support level. Here we go. Get ready. Magnificent. Are you ready? George. What do you think about that guy before he...
It's based on the reaction right after, because the
It's what I thought. The guy was full of crap, wasn't he? Oh, gosh. I said down and up. Take a note, Magnificent. Only 4 brave souls voted? Are you kidding me? Was Randy one of them? Probably not. I'm ready to rumble. Here we go. Okay, get ready. They're now at $5.60. We're coming up to hit my support level right here. We have less than 6 minutes to go. Now I put a starter position in here at the 68.80 level. Did it just trigger? Okay, here it is, support. Yes, it triggered.
Hopefully you've done what you need to do to be prepared for this. Things are going to move around quite a bit over the next couple hours, and there's a reason we got these circled on the calendar. They're fun because there's a lot that we're about to learn.
There is a lot that we are about to learn. Of course, we still also have Oracle earnings after the close today, so
Come on, Jenny Horny.
to go through over the next several hours. But appreciate you for tuning in to Next Gen Investing. We have the watch list, and of course, a very Fed special watch list coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or
It's not
watch
one to
on
dip
demand.
much.
Head over to schwab.com/coaching.
The 6880s. They're not dipping. There's number 4.
For 11 for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Boom! Okay. Get ready for the put.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live on the floor of the New York Stock Exchange, where traders are very much anticipating the Fed decision is imminent. Where you start to
You ready for the put?
on the floor.
I got in the call. Now I'm going to put.
Right now, stocks have been mixed back and forth.
The,
today, will the Fed cut for the third
68.20s.
time? And you hear people saying, shh, as they wait to hear this. It's anticipated 90% likelihood we'll get a 25 basis point cut. And then at 2:30, we'll hear from our Fed chair, Jay Powell. And that will be here. Will this language be something more towards a hawkish cut? 25. So the traders are saying that they hear 25 basis points. We're waiting on the confirmation. But right now, so that's what the stock market anticipated was a 25 basis point. And we have confirmation, 25 basis point cut. We got exactly what we anticipated. Now it's going to be whether or not this is a hawkish cut. Is this the last time Jay Powell will make a cut? And as the Fed chair for the new one is instituted in the new year, here's a look at the markets right now. Where do we stand? You see the S&P 500 up 0.25% at 68.53 right now. And you see the NASDAQ is down 15 points. The Dow is up 304 points. So stocks are moving higher now intraday. The Russell's up 1/3 of 1%.
They're at 860.
Gold,
Profit.
Turned around. Gold is higher here. And oil, which was at 58.29, is also moving higher. So everything is moving higher. It's worth noting that 10-year bond yield, well, right now we're seeing that at 4.15.
It'd be nice to get one more leg down.
Today, so also very interesting here. So that's what we're starting this off with. Kevin Hanks, host of Fast Market.
Here we go. One more. Come on, come on, come on.
We're going to look not only at the stocks moving higher,
68.48.
we can't wait to hear, are there dissenters? And we know Stephen Myron's probably said 50 basis points, right? What else are we going to wait and see, right?
3 dissenters. Nicole, Austin.
There's $9. Now.
So of the voters, Stephen Myron,
bingo,
again dissented 50 basis point cut. Woo! And Austin Goolsbee, no cut, which means Jerome Powell, John Williams, Michael Barr, Michelle Bowman, Susan Collins, Lisa Cook, Philip Jefferson, Alberto Muslim, and Christopher Waller all voted for a 25 basis point cut. So then, getting into the economic, the summary of economic projections, we're getting that as it's coming. But right now, it's 3 dissenters. Remember, we thought there might be more. Remember, here's the thing: Beth Hammock and Lori Logan did.
Okay, we had the fallen wedge. Jimmy said wait until we got into the third one down here. We'd break out on 4. Boom! And then when we got in the put, boom! Right to support. And it hit the 9.
Making the wrong decision, and that's why Schmidt last time sort of, broke out. The prior time they all got on board and made the same decision to prove a point against Stephen Myron. After that, Schmidt in the last meeting said, you know what, I really think it should be 0. That's where the conversation started to really ramp up whether or not we would get another cut. That's why, is he more worried about inflation?
Yeah, exactly right. The big, remember, the dual mandate. If you are voting like Austin Goolsbee and Jeffrey Schmidt did for no cut, you think inflation is high and sticky, which you can make the case that it's not to target, but you can't make the case that it's sticky because it's slowly but surely coming lower. Now, if you voted to lower interest rates like the rest of the committee did, and Stephen Myron voted for 50 basis points, you think the labor market is the bigger concern. And that is the number. Remember, the last unemployment rate that we got was 4.44%, which was one tick away from being rounded to 4.5%. So if you're, the people, the majority of the members, remember, 12 voters, so 3 dissenters, which means 9 people voted for a 25 basis point cut. 1 vote for 50. Go ahead.
I wanted to jump in here and talk about the fact that now we're looking at the fact they're going to be, the Fed says it will buy $40 billion of Treasury bills in the next 30 days. Now, you know that they had, there it is. So I know, that's why I interrupted you, because I knew you would find that important. You know, last time when we heard that, right, QT was stopping, it was essentially QE, and the question then became, when will the Fed start to buy the T-bills? And the Fed had been, you know, they stopped shrinking the balance sheet on December 1st, but now this next move here is a move for a larger growing balance sheet. So 40 billion, it says. Your thoughts?
Exactly right. Remember, the big question was, when we ended QT on December 1st, would we start to do QE and start to add to the balance sheet and buy treasuries? $40 billion says yes, they're starting to buy treasuries. The overall market, the housing market, interest rates should all move favorably because of that. Let's see if it fuels the stock market rally. The EVs were pretty much unchanged when it started. They're now up, you know, about 10 points. So their rally, watch the 10-year yield, 4.17.
Yeah.
Very much since the number came out, but we'll watch how that filters into the system over the coming weeks, Nicole. Yes, QE is back.
All right, so 4 officials penciled in 2 quarter-point cuts for 2026. A lot of folks had anticipated that we would only see 2 in 2026. We're looking at dot plot. Also, the median GDP projection, 1.7% in 2025. 2.3% in 2026. Median unemployment projection, 4.5% in 25, 4.4%. So it's coming down.
Don't fall for it, Nicole.
So that shows unemployment coming in the right direction. At the same time, they talked about the economic activity and that expanding. Okay, so this is screaming no cut right now. I mean, you're not going to see any cut in the next meeting, right? Because it says available indicators
68-40 puts.
have been expanding at a moderate pace. You know, so like sort of like even though job gains have slowed, the indicators are showing the developments that people are out and the economic activity is expanding. In fact, going from 1.7% GDP projection to 2.3%. Your thoughts?
Yeah, I'm looking at the S&P as well. It's got GDP going down a tick. It's got the unemployment rate staying, but it's staying where? 4.5%. It's got PCE
860.
Going from 2.9 to 3% in the projection, and it's got the core PCE going up.
Drop to the 9.
These S&P for September, from September has it going down, has PCE going from 3 to 2.9, 4.5% on unemployment. So they do have PCE and core PCE coming down ever so slightly from the September numbers. But like I said, this is, all these numbers, everything we're digesting, this is a snapshot of what we're seeing right now from the projections. But it's fascinating how much data we're getting and working through right now, Nicole.
I'm surprised the market's not selling off, because this could almost mean no rate cuts coming. We have to wait and see, and I know they're data dependent. We're getting a jobs report, delayed jobs report on December 16th. We did not get it on the first.
But Nicole, we can't trust the data.
So I guess they're waiting on more data, but I would anticipate that some folks might even look at this and say they don't really see any rate cuts anytime soon. It got pushed back from March, more likely in April, right? So we'll watch for all of that. And great to see you, Kevin Higgs. Thank you so much. I turn my attention over to Jeffrey Cleveland, Director, Chief Economist at Payton Regal. Some of your takeaways from what we're hearing from the Fed right now.
Yeah, actually, Nicole, I thought the interesting bit is in the very first paragraph of the FOMC statement. They did make a change acknowledging that the unemployment rate has edged up. Formerly, that little clause in the statement said that unemployment has remained low. So it's sort of acknowledging a little bit of change there. We see that in the unemployment rate drifting higher, so I think that's important. As Kevin said, I think the bit about expanding the Fed's balance sheet, opening the door to that, is important.
No.
I guess I would just a word
Down.
on the dots for next year. It will depend on what happens with the data.
Ooh.
So as of now, it looks like policymakers think the unemployment rate will stay steady or even go a little bit lower. But if the unemployment rate continues to rise next year, there will be cutting rates. So
they're anticipating.
escalating, right?
Exactly,
They're saying
yeah.
that it's going to go from 4.5% to 4.4%.
That sounds like hope casting to me rather than forecasting.
Yeah, that ain't much either.
Glasses or something. You know, the move here, they talked about the economy expanding at a moderate pace. Though job gains have slowed, they did talk about unemployment edged up through September, says uncertainty about economic outlook remains elevated.
Yeah, I think the risk here, Nicole, is that the unemployment rate edges a bit higher, and I think the core PCE rate comes in a bit lower than the median FOMC expectation next year. And if you have that combination, I do think the Fed funds rate will be lower than the median estimate at this point. So we'll just have to see how things go. So in
the hawkish cut. This is not the hawkish cut. I mean, we've already seen Fed cuts rates again, signals it may be done for now. I also saw a headline to the tune of that. I anticipate that, I was saying to Kevin a moment ago, that in interpreting this, doesn't scream cut. It just doesn't. This could be the hawkish cut.
Yeah, I don't know. I mean, the market reaction in bonds so far, I don't think, I guess if we were seeing a hawkish cut, we would expect to see 10-year yields up, maybe 2-year yields up. So far, we're seeing the opposite of that. So the bond
Okay, we're coming to the 9.
Something different into it than that, Nicole. We'll have to see though how Chair Powell frames things. I think.
So this would be an exit idea.
Conference framing will be important. So maybe your hawkish
960.
will come back into play there. One other thing on the bond market, bond people, you know, I'm a bond nerd. So
950.
Bond people really focus on this longer term dot, the so-called neutral dot. And there was some expectation, Nicole, that would creep up, and it didn't in the dots. It's still at 3%. So maybe that's something else that's making the bond market a little more optimistic.
Right, they're going to wait to see what he says in the 2:30 press conference, and the Q&A is really the prepared statements. One thing, then the Q&A is what everybody.
You're at the 9, so that's an exit idea.
Language that you're watching for in particular.
Well, I think
And if it doesn't hold it,
see what is the dispersion in the committee? What are the disagreements, as you mentioned? Is it over?
Should have added one there.
Is it because people are more optimistic on the labor market? What
Now I'm back to even. So yeah, that's just a little move.
Next week and tell us. Maybe they'll write a nice blog post or something, detail it or give a speech. So we'll find that out. But I think that would be interesting just to get a sense of the committee and how they're thinking. I think, though, from my perspective, what I worry about most, Nicole, is when everyone agrees. Like, the groupthink is too extreme. I thought we had that in 2021 and 2022 when everyone said inflation was transitory. Turns out it wasn't. So I worry more about that, the groupthink. If there's a lot of different opinions, I don't know, I think that could be good for monetary policy. At least it will make things interesting for Fed watchers.
Well, the inflation outlook was coming down, so that may be a good thing, at least if you're looking at more cuts. But the stock market, when I look at the S&P 500 for intraday, for example, it did move to session highs now after the release of this number. It moved to 68, 67, 72 on the S&P 500. But, you know, as our old friend who has passed, and may rest in peace, Art Cashin here on the floor of UBS, you always used to say, stay nimble. And this is...
That was 20-some years ago.
...moving next half hour. At this point, but we did see, for example, that we did see those stocks moving higher and oil and gold move higher, and the 10-year bonds holding that 416 right now. Jeffrey Cleveland, it's great to see you. I'm so glad you were able to be with me, Jeffrey, on such an important day here. Director, Chief Economist, Payman and Regal. Thank you. Coming up next, we'll continue our coverage of today's Fed rate decision at 2:30 p.m. We'll go to Washington for our Fed Chair Jerome Powell's press conference. We'll bring you that live as well. And we'll continue to watch all these market moves. We'll be right back.
I'd better get out of this. I want one more candle down to get me above 10. But I'm going to get out of it.
When
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to the Watch List. I'm Nicole Penelides, live from the floor of the New York Stock Exchange. I welcome in Sam Stovall, Chief Investment Strategist at CFRA. I have so many big picture thoughts that I want to discuss with you. Can we talk first about
Yes.
the takeaways that you see from the Fed's announcements thus far?
Sure, Nicole. Well, basically, it's as anticipated that the Fed has cut rates. That it's implying that there's no assurance that they will be cutting again, which really just reminds investors that they are data dependent and are going to take a wait and see attitude. And also, we're not expected to get the employment data until the 16th, as you just said.
Which I don't think they understand.
And I think we could be surprised and see an unemployment rate tick up to about 4.7% because of the shutdown, because of the furloughs. But then that should moderate to about a 4.4% level when we get the November employment report.
What do you make of the fact that the 10-year didn't move at all? Is that 416 before the announcement and still sitting at 416? What does that tell you?
Well, I think that tells me that the bond vigilantes are not all that worried that the Fed will be overstimulating the economy. Yes, Fed Chair Powell will likely be replaced in May, and the person who's taking over will end up being more dovish and pushing an agenda that way. But I think the bonds people are taking a wait and see attitude as well, that possibly inflation is headed in a downward direction, and that we are not simply fanning the flames of inflation.
Back to 860.
Now, when you and I talked, you said even when you had the winning prior months, that the November, December, January was still a winner. I'm paraphrasing. But is that still the case?
Well, the case is that December does very well. Typically, it is the best month of the year in terms of frequency of advance at more than 75% of the time. It is the second best month in terms of average price change. And what was encouraging to me was that in the latter part of October, you had not only the S&P 500 secure its 36th all-time high of the year, but you also had the Dow, the NASDAQ, the Russell 2000, and the S&P Developed International Indices posting new highs. And traditionally, when you have that many asset classes around the globe hitting new highs, that implies that the trajectory is likely to remain upward for the coming 3-month period. So we'll have to wait and see whether history is a good guide because it's never gospel.
So 6 officials, what we did see is 7 officials want no change for next year. You had Schmidt and Goolsbee who wanted no change today. So they would go into that count. At the same time, 11 officials only want 1 cut or less. Was this a hawkish cut?
I think it really was as anticipated because we had only 1 cut for 2026 already in the SEP numbers at the last report, and then possibly 1 more cut in 2027. We're of the mindset that we see a cut in each of the 2 halves of 2026. And that our belief is that the Fed will err toward the sign of caution as it relates to the jobless situation and also with a more dovish leadership at the Fed. So
I think that, you could read into it that it is more hawkish, but in my opinion, it's simply reiterating that they are data dependent and they're going to wait for the data.
Look, they said they're watching both sides of the mandate, right? They want price stability, so they're watching what's going on with inflation, but they did say that downside employment risks have increased, and that could mean further cuts. We think about politics, and that we have a new Fed chair coming in. Any thoughts on that? When we think about the two Kevins and Kevin Hassett, who's probably more likely the name, and how Jay Powell wants to leave his legacy or anything he might. This may, in fact, this won't be his last presser, I don't think. But he's coming down to the wire. May is really when he ends. But what are your thoughts?
Yes, he's coming down to the wire. He'll have a couple more pressers between now and then. And I believe he's going to do what he believes is best for the economy, not favoring one party over another. And I think that that's what investors feel reassured about. And the real question is if they can maintain
They're at
that
$9.
confidence with the next Fed chair. So that will be just a wait and see attitude. But, if the unemployment numbers do top out at about 4.5%,
68.40s.
core PCE comes down to the 2.4% as we anticipate.
Come on, drop.
And that basically the trend is our friend in terms of lower inflation. Then we could end up seeing additional cuts, one more at least between now and when his term comes up.
And when
870, 970.
Anything in particular?
No, give it to me.
Or, don't you love when he uses moderated?
We're back at support here off the 21.
The language, any word could really mean a difference. Is there any word you're watching for?
Well, I'm not watching for his prepared comments. It's more in response to journalist questions, because sometimes the inflection of the voice, sometimes the choice of words can reveal a little bit more than he would like.
There we go.
So he has not had the time to think it through.
No.
So that tends to be more revealing, in my opinion, and that's why it pays to pay close attention.
Got it.
And
yes.
Seeing some reports that we're going to watch oil moving higher. This as the U.S. has seized an oil tanker off the coast of Venezuela. I don't have confirmation on that, but it's worth noting that it is crossing our pipelines, and that may be something that will also move oil. Oil, had been at 58.29, and right now it's at 58.53. So that has moved higher in the last half hour as well. So keep an eye on that, folks. Sam Stovall, just a quick projection for 2026. What's the best sectors to be in for 2026? Quickly.
Well, historically, you enter the year by letting your winners ride if the prior year was up, as 2025 most certainly is. So stick with the communication services, tech, and financials for now.
All right, great to see you. Sam Stovall, Chief Investment Strategist, CFRA. Great to see you, Sam, always. Coming up, we're going to have Jay Powell's opening statements, and then the Q&A.
Everybody's wondering, how does he do it?
Stand by. The rate decision is out. We got the 25 basis point.
Hey, it's a man in charge, yeah. Moving markets, shaking things, let's roll. Oh. Yeah, moving markets, shaking things, let's roll. Jerome Powell in the house making big calls. Chair of the Fed, he's the one who stands tall. Interest rates climbing, inflation's running wild. Always fighting pies, keep the economy riled. Behind the curve, they say he takes a step slow. Balancing the scales on the Wall Street flow. But when he speaks, the markets react. A cat and mouse dance, keeping us all intact. Powell's rhythm, feel it in the trade. Shaking up the market. Don't let it fade. Riding on the waves of financial tide. Behind the curve, but he's our guy.
DJ Bobo.
It's a man in charge, yeah. Moving markets, shaking things, let's roll. Oh, yeah. Moving markets, shaking things, let's roll. Jerome Powell in the house making big calls. Chair of the Fed, he's the one who stands tall. Interest rates climbing, inflation's running wild. Always fighting fires, keep the economy riled. Behind the curve, they say he takes a step slow. Balancing the scales on the Wall Street flow. But when he speaks, you know the markets react. The cat and mouse dance, keeping us all intact. Powell's rhythm, feel it in the trade. Shaking up the market, don't let it fade. Riding on the waves of financial tide. Behind the curve, but he's our guy.
Further congrats to who? Jimmy played it. Jimmy wants some recognition. We have a failure to communicate.
2.3%, and that's, I suggest, quite meaningful. And it could be for various
We have
factors.
failure.
Adjustments that are going to be benefiting
Failure to communicate.
taxpayers, even consumers from the big beautiful bill, which a lot of the provisions will be starting to be implemented at the beginning of the year. It also may be based on their reduced impact of the tariffs going into next year, because that has been impacting potentially GDP this year. So that, I think that's quite important. From a labor market standpoint, not much of a change, but there was a slight change, if you will, when it comes down to the 2027 and 28, but it's not meaningful. But even PCE numbers also came down for this year from 3 to 2.9%, and even for next year, the number came down from 2.6 to 2.4%. So the projections based on the Fed
We had a
consensus
failure
for
communicate.
next year. There is some projection of a one rate cut next year. But nonetheless, I think the GDP number change for next year is quite impactful. They're actually very optimistic.
And it's interesting that you brought that up, because the big beautiful bill is something people talk about, because they said if you have monetary stimulus and fiscal stimulus both working together, that really could mean some good things ahead for the economy, to your point, with GDP moving higher to this level here of 2.3%, when we had been looking at 1.8%. So there could be some drivers. The concern here is the downside risk to the employment. They didn't necessarily mention that we are
JFBR, Randy.
to be more worried about the employment picture.
Correct. And here's the thing, and it's important to note this, that the labor market really is not increasing or decreasing much. We're sort of at an inflection point, but it doesn't mean that's going to be bad for the economy, because productivity gains. Economic growth is a sum of both job creation, job growth, and productivity. So perhaps there's some sort of insights that Jerome Powell can provide us in terms of why the committee increased their target for GDP next year by quite a lot. It could be based on productivity growth, or it could be a combination of that, as well as some reduced expected tariff impacts going forward. Also, again, provisions in that big beautiful bill, which many won't start until the beginning of next year. So the last thing I'll say here, hopefully I can get this in before the Q&A call starts, that the balance sheet, this is interesting too, because they're adding
Go to
$50 in terms of purchasing T-bills, but that may not necessarily be QE in the sense that they're increasing the balance sheet. It could be essentially monies that are there
JFBR.
mortgage-backed securities to purchase T-bills to improve short-term liquidity and bank reserves. And again, that's
JFBR.
potential credit constraints that may come about going forward.
I mean, we were talking, obviously, when, buying these treasuries, $40 billion, which will start on December 12th, theoretically...
It says 0.49 million.
But what was interesting is we ended QT on
Something don't make
December
sense
1st,
about that.
Essentially became QE. it was good news overall. People liked that liquidity, and actually, I was told for Bitcoin in particular, it removed some of the headwinds for Bitcoin, and that is when Bitcoin took its turn and finally moved higher after being at 80,000 on the 21st of November. So it really did provide some moves here, to the upside.
Yes, I mean, you could certainly look at Bitcoin as perhaps a risk, a tail risk, if you will, but also proxy of liquidity. So therefore, again, it may be indicating as one, variable that bank reserve liquidity is becoming tight. And so maybe this is why the Fed is addressing this preemptively by essentially moving on T-bills. These are short-term instruments, not long-term instruments, so it may not impact the longer end of the curve.
You got that short right.
End up helping essentially widen out the yield curve, but also
I didn't see where it went
addressing
to.
potential liquidity concerns at the bank level, which again, just translating down to your point, Nicole, could have been pictured with the retracement we've seen with Bitcoin down quite a bit over the past couple of months.
And look, I mean, we've seen the resiliency of the consumer just in the 5 days of the Thanksgiving to Cyber Monday. You saw the numbers higher. People were, in fact, spending. Maybe while they didn't get as many goods for their purchases, the spending was still higher. Quickly, because he's coming out in a moment.
The labor market is still, basically at the non-accelerating rate of employment. In other words, non-inflationary accelerating rate of employment. So essentially...
Okay, George Sillis, thank you, George. We now go to Jerome Powell in Washington at the podium, our Fed chair.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data...
Hey, it's a man in charge, yeah! Moving markets, shaking things, let's roll! Oh! Yeah! Moving markets, shaking things, let's roll! Jerome Powell in the house making big calls. Chair of the Fed, he's the one who stands tall. Interest rates climbing, inflation's running wild. Always fighting pies, keep the economy wild. Behind the curve, they say he takes a step slow. Balancing the scales on the Wall Street flow. But when he speaks, the markets react. The cat and mouse dance, keeping us all intact. It's a man in charge, yeah! Moving markets, shaking things, let's roll! Oh! Yeah! Moving markets, shaking things, let's roll! Jerome Powell in the house making big calls. Chair of the Fed, he's the one who stands tall. Interest rates climbing, inflation's running wild. Always fighting pies, keep the economy wild. Behind the curve, they say he takes a step slow. Balancing the scales on the Wall Street flow. The markets react, the cat and mouse dance, keeping us all intact. Powell's rhythm, feel it in the trade, shaking up the market, don't let it fade. Riding on the waves of financial tide,
Jimmy's having fun.
At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation.
Challenging situation.
No risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach
You're
in
so
promoting
full of
both sides
crap.
of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2000.
SPX right off the 200. Man, this is simple.
It's a man in charge, yeah. Moving market, shaking.
our inflation sustainably down to our 2% goal and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Bullshit.
At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside
We're
forecasts,
back at the
you can
200
see
here.
a pickup in growth in many of
the 6880s. We've got a hammer, long leg doji. What time is it? 1:44. First one's 480. Might add another one. Break it. There's 650, 710. Get out. 750, 60, 70. 730. I'd be happy with that. 740. There he goes. I'm going to sell it at the market. Three white soldiers. There it is, right there. Thank you very much. 770. 820. Looks like it did. Ten minutes to power hour. It's a very good day. Boom, baby. 1150. 1190. 1230. 1380. Right to resistance. 68.84.47. Uh-oh. 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 68.84.47. From Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Oh, yes. Look. Look how this respected the 200. Boom, boom, boom. We have 4 minutes to power hour, and I'm a-slinging it, baby. God, look at it go. 1720.
You don't mind I'm cleaning here. Sorry, I'm just clean under the bar. I'll put it back away. Just be careful with your life. Sorry. Can you just hold it up, please? Okay. Sorry guys. Just be careful with your legs. Nice. I will take it. Okay. What's something? Where are your muscles? At home. You look like really good place, honestly. Oh, it's good. The bait is good, really. Just keep going.
JFBR, Randy's at the 200 here. I'd say people are heading home. SPX, new high, $1,900. Well, I left 500 and 1,100 on the table. $1,100 I left on the table. They're now at 1970. That's 500 there. Oh God, 500, 1,700 on the table. You got stopped out? You need BDRX to move up? Is that Borox? BG. BDRX is Borox. Oh, God. Randy. Well, I'm going to tell you need 7 or 643 to hold. 640 or $7. Just under 7. 689. That's your support channel. And resistance to break would definitely be 8. 804, 805, 801. $8. Shares are trading higher by around 14%. That's trade U.S. American depository receipts trade higher on Wednesday. Is this European? European equities traded in the U.S. and American depository receipts trend higher in Wednesday's trade, and I don't think it had anything to do with this. Biodexa, we'll find out. Healthcare. United Kingdom. Yep. United Kingdom, Randy. I'd have probably said no to that one. Okay, we got to hold 640. That's triple top break, sending triangle. So that's a solid support. It looks like it might got halted. It's now 212. Is there going to be a pullback in the close? That's the question I'm asking.
It's the man in charge, yeah. Moving markets, shaking things, let's roll. Oh, yeah. Moving markets, shaking things, let's roll. Jerome Paul in the house making big calls. Share of the Fed, he's the one who stands tall. Interest rates
Rack support, yo. Let's bounce off this ascending triangle. $20.30. My God. Oh, yes. Ciao, pal. Look there, Randy. What'd Jimmy say? 640? Boom. What happened to Chow? I think that would have been a good trade. Huh. That's strange. Mm-hmm. And we're dropping back down again. Prepare ye in the name of the Lord. Can we get a big fat candle right here? We might hold right here. Right there, exactly. There's $300 bounce. It was at 14, I thought. The 68.80s. Yeah, it was. It already bounced. Well, I missed that. I saw it at 14 something. But that's definitely support. We have less than 34 minutes left. Back down to support again. Got lower highs, head and shoulders. I'm really done, but might get one more trade in. There's $100 right there, but ain't worth that. 68.80s. It's now 235.
They set a 50% threshold, which feels very arbitrary. Think about how that would be executed. Companies that might go to 55% down to 30%, it'd be very unworkable. Third, and this is probably what's most concerning, is
I disagree.
They're supposed to be neutral, and here they're injecting what I would call policy considerations and opinions. And if they were to have done that, they might say that Chevron, which has 67% of their assets in oil, shouldn't be in an index. Newmont's a gold miner, has 61.5% of their assets in gold. Weyerhaeuser's a timber company, 70% of their assets in wood. Simon Property Group owns malls. I'm looking at one of their malls right outside my window. 66% of their assets in real estate. So it's interesting why Bitcoin, why digital assets wouldn't look like those companies and why Strategy doesn't. And the last thing I'll say is we're very early in the industry. We entered as the first Bitcoin treasury company in 2020. You really saw that large increase in Bitcoin treasury companies in 2025 this year. And it seems very early to pick winners and choosers and stifle innovation in a category like this. I would say this is akin to saying that oil miners shouldn't have had their assets, or oil companies shouldn't have had their assets in oil rigs and oil in the early 20th century. This would be like in the 1980s saying that telecom companies shouldn't have built out cell towers and spectrum, or 3 years ago and saying AI companies shouldn't be investing in LLMs and high-performance compute. It just seems early to make a decision that digital assets shouldn't be an area that people should invest in.
You bring up some good points there about the early innovators versus some of the longer-standing companies here. A decision expected there by January for the MSCI. But as we look ahead to 2026, Fong, what do you see as the biggest opportunities for Strategy and also for the broader digital asset market?
I think what's going to happen is we're getting a significant amount of regulatory clarity in the U.S. I think the U.S. government has done a fantastic job passing the Genius Act and soon to be passed, hopefully, the Clarity Act. And that really just opens up the ability to truly innovate in digital assets. And I think what you're going to see, and the opportunity I'm most excited about, are traditional finance banks, JP Morgan, Morgan Stanley, Citibank, TD, etc., entering into this space full force, full-fledged, creating crypto and Bitcoin custody, Bitcoin exchange services, Bitcoin lending services, Bitcoin staking services, and I think we'll see a brand new industry start to blossom, which is why I think it's odd that an index would decide right now to stifle it and go against, frankly, what the U.S. government has supported. But I think 2026 is going to be the year where we see the intersection of DeFi and TradFi in a big way.
Fong, we appreciate you taking the time to be with us on Market on Close today and talk to us a little bit more about Strategy. That's Fong Lee, the president and CEO of Strategy. And with that, I'll send it back over to Sam in New York.
Fantastic chat, Molly. Thanks so much for that. Coming up next is Options Corner. Ricky Cat will join us to look at Oracle ahead of its earnings after the close today. That's coming up next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, here's the pullback.
I'm Kevin Green, and I track options flow daily.
No, you're Kevin Brown.
How it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
That wasn't funny, Jim. That was racist.
Trading at Schwab
is powered
Would you
by
say that was a
Washboardjim,
racist comment
giving traders
when I
even
called
more
him Kevin
user
Brown
shopping
instead of
skills
Kevin
with
Green?
tailored education. Get an
Yes or no?
expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning.
No comment?
Trade brilliantly with Schwab.
Welcome back to Market on Close. Oracle set to report its latest quarterly result after
Jim,
the
I don't know
close
about
today.
you,
Analysts expecting earnings per share of $1.63 on
but I
revenue
took that
just
kind of
over
offensive.
$16 billion. Investors will be looking toward Oracle's capex and debt on its balance sheet for a measuring stick for the AI trade. Shares of Oracle jumped more than 35% following its last earnings report, but have since fallen 36% from intraday highs that it hit on that day. They are, of course, the focus of Options Corner today ahead of the earnings report after the bell. Today, joining us, Rick Ducat, our lead market technician, here to break down some of the technicals that we're looking at and the options action that we're seeing in Oracle ahead of their earnings.
This
As
PX
we take a
splits.
look at Oracle, I just mentioned you can see it in the chart there, some of those moves we saw. The earnings event, big move to the upside,
6900s.
giving back a lot of that. But as it's performing against its broader sector and the broader market, it still is, has been higher a lot of the time. Walk us through some of your observations here, Rick.
Marley.
We're basically on par again with the XLK technology ETF here. But yeah,
Rick
quite a
Ducat.
fall from grace for Oracle here. And, Oracle also stacks up pretty well against some of the other competitors in this cloud software field here. Some heavyweight names, to be sure: Google, Microsoft, Amazon, Salesforce, the weak member of this group too. But Oracle's kind of one of the most interesting parts of this whole AI arms race to me, because they've taken on so much debt to finance this very rapid transition here. It's still kind of a question mark if the revenue that they gain from doing this will be enough to make up for it here. And one other thing that I thought was very interesting, I hadn't really seen this mentioned too many places before. Oracle bought Cerner in 2022. Okay, so that was all the medical data, all the hospitals, insurance companies, doctors' offices, etc. They're kind of the only ones that have access to all this data. AIs need data to train and refine their processes here, and Oracle seems to have not a monopoly, I would say, but a very large amount of this data that other people can't quite get their hands on here. And if you don't have the data, it reminds me of an old classic computing adage: garbage in, garbage out, referring to the results you get.
All right, and as far as the results, that we're expecting as we look at Oracle, and we've seen it against some of its top competitors and how it moves, but as we look at it standing alone in terms of the technical setup, what's the technical setup walking into its earnings report?
Right, as we said, they gave up all of those gains from last earnings and then some. We found ourselves back all the way here near 189, our green line here. That was where shares opened up after our last earnings event or two earnings events ago, in June. So now we have this situation where we were treated back to this notable supportive level, but we did bounce there. So now we're holding on above 217. That was another high point and subsequent low point here and here. So that's an area to watch. Short term, upward trend line still in play. Breakout from our rather steep, rather narrow, downward sloping trend line in blue. We can also look at our moving averages here and see that our weekly and quarterly and yearly moving averages, they're all kind of clustered together, which suggests there's not really a ton of clear directionality to this current price activity here. As we've seen such rapid fire swings and reversals here, it seems like these lagging indicators haven't quite found a direction here. RSI trending upward right about at the 50 midline here, but earnings could significantly rewrite that story as well. When we do look at volume profile, we can see here our point of control, our heaviest trading area, our thick red line. It's about 233. So this whole area between 230 to 250 is the place that the bulls would need to clear and push above to take a shot back at that 300 level here. So an interesting setup, to be sure.
And as far as the analyst action in advance of the earnings, sometimes we see some adjustments to price targets. Have we seen anything like that with Oracle?
The only one notable one that I saw recently, it was hard because there was so much news about Oracle. Remember, the Ellison family.
So much news about Oracle.
Paramount deal here as well. But Barclays cut their price target yesterday to 330 from 400. They kept their buy rating. Still, 330, really? 50% gain from here. So, while that is a big cut, it still looks looking for some pretty notable upside.
And as we look at the options activity on the day, oftentimes higher in advance of an earnings report, are we seeing that with Oracle?
Yes, the sizzle, the options volume versus the 5-day moving average is about 2. At the time I checked, we saw about 450,000 options traded here. That heavy activity, it's probably significantly higher at this point here. 64% calls at the time. December 19th expiration, 9 days out. If we were to look at that here, that's our orange box here. So that's about a 12.1% expected move at the time I checked. As I said, moving pretty quickly here. Open interest for that month on the call side, a wide range, 190 to 400. The highest at 280 was 27,000 contracts. Put side, 140 to 280. 190 is the highest level there, 17,000 contracts.
Okay, what a day.
As far as any notable trades that you saw, did anything stand out to you?
There were.
I have, some of us were talking about how hard it is to trade on FOMAC day. I want you to go back and look at Monday and Tuesday. Them days were harder than today was. Do you think? Leading into the FOMAC day. So let's say we ran instead of what we did in the last couple of days. Let's say we had a couple good bullish days. Would I look at today differently? That's a good question, ain't it? Tell me that's not a good question. That's an excellent question. Because I probably would. But I was listening to CNBC. It might have been Schwab. I can't remember which one it was. But they said that the rate cuts would already be priced in. So that's why they were pulling back. And then when they found out that they were true, I was bullish today. I was shook up Monday. And yesterday I kind of felt like we were going to have a pullback again at the end of the day like we did. But today I was more or less bullish. I was able to get right in there and call that trade out. I wish I'd have held them. Because right there would have been $4,000 just on 2 contracts. So when you have being in the now, so when you have days like today or a holiday or a 4-day weekend, remember them days when it comes around again and use it as a learning lesson. Do you understand? Someone say yes. Magnificent, say yes. Unless you have me on mute again. That's right. So we've got 11 minutes left, and the puts are now at no, they're not. They're at 7. What are they at? They're at 650. They were higher than that just a bit ago, but the spread is wide on them. I'd be scared. I don't like wide spreads. Oh my gosh. Oh no. There's $400 on the put. I'd be out of it right here at 63. I have to say I got the best moving averages of all. Ain't that right, George?
That's improved from an EPS standpoint by 22%. And typically speaking, when you adjust your guidance by a certain percent,
Yes, Jim. Your guidance on the moving averages, using the 200 EMA and SMA with the 63 and the 50 SMA and the 21 EMA and the 9 EMA are grand. I use them myself. I'm glad I come across you on your YouTube channel, and I'd like to see if you'd like to come work for Schwab.
They've always been profitable.
I would love to.
Quarters, but I suggest they were expecting
As long as I get to
some sequential declines
have
in sales and earnings, and that
get to work next to Marley and Nicole
that's very meaningful for sort of a price reversal.
and Sam and Ginny Horny.
Moved pretty aggressively upside today.
Okay, so it's in the business of the stuff that helps make the chips, so photo masks as it's called. I'm just wondering, what has shifted in the market that's led to this huge demand now? Because I am seeing that there are some competitors out there from the likes of China, for instance, that seems to be sort of gaining a lot of market share here in this business. But it looks like some of the demand is also tied, as far as their customers are concerned, out in Asia, places like South Korea. So I'm just wondering, why the sort of jump now in the level of demand for this company?
Well, one of the things I found out about the company is if you just go back about 4 or 5 years, the biggest customer that they had was Huawei out of China. And in fact, if you look at the breakdown of sales, just in Taiwan and China, it's 60%. And then if you include Korea and some of these Southeast Asian countries, it's close to 80%. Now, only in the United States, they only generate about 60% in the USA and the rest of course, the European markets. So I suggest the customer concentration risk was always a problem, perhaps, with the company. It may have taken some time for them to move away from Huawei as a primary.
We have 6 minutes left,
to other Asian,
and the 6,900 puts
also maybe
from $6 went up to 11. Right there, $11. I don't know how he does it, but that only took 8 minutes. George. Now they just dropped. Well, I'm cooking a special hamburger right now. Anybody ever put an egg on your hamburger? I'm warming up the buns now, and when the bell rings, I'm going to go into the kitchen and make my burger. This is a special burger. For doing so good today, I rewarded myself with an egg on top of my burger. Best hamburger I ever ate, well, there's 2 of them actually, but the best one was in Hawaii. I had a pineapple burger. And then the second best was here just up the street. And that burger cost me $32. It was named after a St. Louis Cardinal baseball player. I'm going to see if I'm going to type something in here. Best burger in town. Best burger in Springfield, Missouri. at the Burger Bar. Absolutely love the fresh hand-cut French fries. Okay, already. Got 3 minutes left. My bun will be done before. Oh gosh, where are they at now? $12.70. $12.90.
We did see stocks and gold popping. We saw the dollar and yields dropping. What did you make of it, and what levels are you watching in the final?
I'm watching your cleavage.
Yeah, obviously we got that rate cut. The market's a little bit
They got that
excited.
blocked.
Maybe over an exaggeration when it comes to that $40 billion that they're going to be purchasing in T-bills. I think that's more structural in nature. It should not really have an impact when it comes to the yield market as a whole here. But if we're kind of looking at the levels that we highlighted earlier this morning, we hit that 6,900 level just about maybe 5 minutes ago or so. And now we are pulling back here a tad bit. That was a big call wall area that we highlighted, and now we are seeing it kind of move back. What you really don't want to see is us getting back into this range over the next couple of days, getting below that 68, 80-ish area. That gets you a little bit more concerned that maybe the market obviously had a lot of enthusiasm in the day, but are we going to see any type of follow-through move? And the lackluster performance that you're actually seeing from the Mag 7 kind of suggests that we are looking for a little bit more of heavy lifting. So going into the close, once again, 6,900 area of resistance. I'm actually looking at 68.70. We have about 3 minutes left to go into the close. We're about 16 points away, so that might be far-fetched. But overall, I think this is a pretty decent day. As long as we're going to be able to hold these gains, and as long as we actually have really good earnings coming from Oracle, I think that's your next big risk when it comes to volatility in this market moving forward.
And KG, as we got the Fed rate cut decision, and then we got the commentary from Powell afterwards, was there anything that stood out to you in the action that we saw on the S&P or any of the other indices?
Yeah, the fact that we're only pricing in 25 basis points worth of cuts for next year, I think is kind of the telltale sign. And then that $40 billion, I think everybody's looking at that as the start of quantitative easing, but those are going to be on the T-bills front, $40 billion for T-bills. When we issue hundreds of billions of them on a monthly basis, is really not that much. And once again, I think it's more of a backstop in order to provide liquidity to large corporations that may need to leverage the repo markets just in general. So we may have gotten a little bit ahead of ourselves, but here's some bright spots that you can actually look at in this market. If we're looking at the S&P 500 equal weight, if we're able to hold these levels right now, we're going to be hitting a new all-time high. Basically, the equal weight hit an all-time high before the S&P market cap weighted index, I think, is a telltale sign here, and something that we need to be mindful of moving forward. If it's able to break here and continue to move higher, you could actually still see this expansion story remain in this market, at least for now. And then also looking at value stocks, once again, hitting an all-time high here today as well, giving you kind of an indication that there's some opportunities in this market. And if you're looking for S&P 500 S&P 500 stocks, there's only about 54% of them that are above their 50-day moving average. So a lot of opportunities for traders in this market here.
Okay, so we have seen stocks rallying today off the back of that decision. The market had been pricing in a hawkish cut, but as Ben Emmons writes, they did get a dovish surprise. So we have got industrials higher, healthcare higher, financials as well as energy. Here is your final bell for the day.
The final bell. Boom. Rewarding myself with a egg burger. So that's what I just cooked. It's a miniature burger. And that's what my dinner is going to be. And then I'm going to take a nap. And then I'm going to go get my tan on. Today was a good day. A learning day. And I like these kind of days. I call it the pal day. So I'm going to take a bite in my burger. I want everybody on YouTube to see this beautiful, delicious thing. Oh my gosh. Simply marvelous. Hamburger cooked on a George Foreman grill. And that'll be it. I'm going to get out of here and do my thing. And we'll see you again tomorrow.